Welcome to the first video in the training series. This video is entitled Setting Up the Right Broker with Level 2 Software. This is going to be a quick video. I just want to explain to you briefly about the importance of using Level 2 to trade with and using the right Level 2 platform to trade with. Both of those are critical. This is a picture of Level 2, and I'm going to be covering that extensively throughout this video series. I've used just about every broker there is out there to use, and this one, SpeedTrader.com, is definitely the best. First of all, I really want to discourage you from trying to trade the stock market, period, using Ameritrade. Okay? Ameritrade is not a good broker, especially for OTC, BB, and pink sheet stocks. It's a terrible broker to use. You don't want to use them. The reason why is because you cannot get filled. I mean, it's terrible. You don't want to use them. E-Trade is another one. They are no good. Matter of fact, they're terrible. Probably even worse than Ameritrade. CyberTrade is no good for trading OTCB and pink sheet stocks. Scottrade is no good. Scottrade charges a lot of money for trading stocks under $1, and most of the stocks that you're going to trade for OTC, BB, and pink sheet stocks are in fact under $1. RushTrade has a nice level 2, similar to SpeedTrader, but they're no good because you can only route through one market maker, and that's Knight, and that is simply not acceptable. Also, don't try to trade stocks without using level 2. You absolutely must have level 2, period, without exception. Do not try to trade stocks using a web-based platform like lowtrades.com. You simply do not want to do that, or free trades. You must have level 2, and you must use the right broker. This broker, SpeedTrader.com, is the best broker that I've ever found. And let me give you an example of why. Okay, you notice the website changed to RealFastTrader.com, but this is the sister site of SpeedTrader. So it's the same exact thing, same exact company. Now this is showing you all of the market makers that you can route to for free. In other words, no extra cost. It's just going to cost you the price of the commission, and you can route to any of these market makers for no extra charge or for free. This is extremely powerful. Okay, I cannot begin to stress that enough. This is very, very powerful. Very, very important, and the reason why this broker is so good, because you can do this. Now let's take a look. Let's say that you wanted to trade $2,000 of your money, and you wanted to buy a stock for 0.02, which is 2 pennies. That equals 100,000 trades you could buy. Now, if you had to buy 100,000 trades but pay 0.003 per share, that's times 0.003 would equal $300 just to buy, and $300 to sell 100,000 shares. So obviously, that's not feasible. So there's no way that you're going to trade OTC, BB, and pink sheet stocks and route to these ECNs. But with a normal broker, first of all, a normal broker wouldn't even have all of these market makers that you could route to, period. They would have maybe half this many. And then all of them would be 0.003 or even 0.004 per share to route to. The only one, most of them go through Knight. E-Trade goes through its own market maker, which is ETRD, which you don't even see here. And that's one reason why E-Trade is no good, because unless you're buying or selling to another E-Trade customer, you don't get filled. Ameritrade doesn't even have the ability to route to any market makers. So you just have to accept whatever they give you, and it's really bad. I mean, you just cannot get filled. CyberTrader, you can route to quite a few different market makers, but again, it costs you so much extra that it's just simply not worth it. So if you want to trade these stocks, and believe me, you do want to trade these stocks, you can make so much money trading these stocks. And I'm going to teach you exactly how to trade these stocks. It's not as hard as people think it is. It's much easier. You just have to have the right tools and the knowledge on how to trade them. And that's what I'm going to teach you. But it all starts with using the proper platform. If you don't use the proper platform, then you really, I would never do that in a million years. You've got to use the proper platform. SpeedTrader.com is the proper platform. So, just wanted to show you this so that you could see for yourself. All of these market makers are all free, and you'll want to write these down and keep them in front of you because you're going to want to use these market makers when you trade. Most brokers go through Night by default. So Night has a lot of traffic going through it, a lot of volume going through it. This can both help you and hurt you. There are certain times that you want to use Night when it works to your advantage, and there are certain times when you want to stay away from Night because it's a disadvantage that everybody's going through Night. And I will show you when is the right time to use Night and when is the wrong time to use Night. But what's so nice is that you can route through any of these market makers. So let's say Vert happens to be on the bid, and it's the only market maker on the bid. Well, you can just simply select Vert and route directly to Vert and get filled within a couple seconds. Vice versa, let's say that Jeff was on the ask, and Jeff was the only market maker on the ask at a certain price. Well, you could just route directly through Jeff and get filled. Somebody else, like let's say you were going through RushTrade, for instance, .com, and you wanted to buy at the ask, but only Jeff was at the ask. Well, you would come in at the same price at the ask, but you'd be on the bid at the same exact price as the ask. And you would not get filled because Jeff and Knight don't do business with each other. That's why trading OTCBB stocks and pink sheet stocks are so tricky, because they all trade through independent market makers. And many of them don't do business with each other. Some of them do, but many of them don't. So it can be very tricky. But if you have the proper tools, such as SpeedTrader or Real Fast Trader, then you can trade these stocks on a professional level, get yourself in, get yourself out very easily and quickly, and you can make a tremendous amount of money and have a big advantage over everybody else in the market. Now, it does cost something to trade with this. DAS Trader Pro Level 2 is what you want. It costs $125 a month, which is a lot of money. However, you get it for free if you make 20 trades, and it's so simple to make 20 trades. First of all, that's trading 10 stocks in a month. So if you buy a stock, that's one trade. If you sell a stock, that's 2 trades. So all you need to do that is 10 times, buy and sell 10 stocks in a month, and you've got the software for free. Now, if you're serious about trading, you can make that many trades in one day. Certainly, you could make it within a few days or a week with no problem at all. So doing that within 20 trades within 1 month is really super easy, and you should be able to do that with no problem at all. So you should get the software for free with no problem at all. Again, you want to write down these market makers and even go to this website so you can see what they are. Write them down, put them in front of you, put them in front of your monitor, and you're going to want to get real acquainted with these market makers and see what's on the bid or see what's on the ask and look up which ones you can route to and start using them, because this is where all the power is. This is what's going to allow you to get in and get out very, very quickly and have a big advantage over everybody else in the market and be able to make a tremendous amount of money from these OTCB and pink sheet stocks. So let's go back to SpeedTrader. So this is the broker I recommend. Now, when you go to set up your account with this broker, under Contact Us, call them up and talk to Maria Berry. Just ask for Maria Berry. Everybody there knows her. Tell her that the website Day Trading, Gapping, Swing Trading sent you, and she will give you your trades instead of I think it's $9.95 per trade. She'll give you your trades for $7.95 per trade. So you'll get a nice deal, $7.95 per trade, under $8 per trade, and you'll have 18 different market makers on which to route to for no extra charge. So I'm telling you, this is the broker of choice. Matter of fact, this is the best broker I've ever used, hands down. And I've used them all. I've used Realtick. I've used them all at one time or another. And this broker, hands down, is by far the best broker out there. So, the first thing for you to do then, obviously, is to watch these videos. But you're probably with another broker right now, and I really want to stress to you how important it is for you to change over. Once you do, and you start using this broker, and you start routing to the different market makers, and you see how much easier this is, how much faster and better this is, and how far superior this is, you'll never go back to using another broker again. I don't make any money whatsoever for recommending you. Even if you say that website or don't say that website, I don't get any money at all. I don't get any kickbacks. I don't make any money in any indirect way, period. I don't make any money. So just talk with Maria Berry and get yourself started and open up an account with speedtrader.com, and you will be well on your way already getting started to having the right tools in order to trade OTC, BB, and pink sheet stocks with. So again, this is just a real quick video. I wanted to explain to you the importance of using Level 2 and using the right Level 2 platform. So this is the conclusion of the first video, setting up the right broker with Level 2 software. I will be back in the next video, the second video, learning to use Level 2 software. And what we're going to do is go into speedtrader.com and set it up. I'm going to teach you how to set it all up and get ready to start trading. So this is the conclusion of this first video, and I will see you in the second video. Okay, welcome. This is the second video in the trading series, learning to use Level 2 software. Okay, I have up DASTrader Pro. When you first bring it up, you're going to see a bunch of windows up here. If you want, you can go ahead and just close them all. This is the only one that you cannot close. This window here is where your positions are going to be, where your open positions are going to be, where your closed positions are going to be. Now, everything you do within DASTrader, in order to set it up, you just right-click. So if you right-click this window right here, like this, you can click on Config, then left-click this, and you'll see that this window here pops up, and all you need to do is just choose whatever you want from over here, and by default it'll bring a bunch of stuff over here. You can just bring it back over if you want. What you need to know is your account. You don't need to know the type. You should have a margin account instead of a cash account. You want to open up a margin account. You can do your realized and your unrealized. For trading OTC, BB, and pink sheet stocks, you don't use buying power, overnight buying power, so you really don't need to pay attention to that. I like to put in how many tickets I've done, so I know how many trades I've done. You can put in the shares, and you can put in the commission if you want. So, and then all you do is just click on here and move it over like that. Commission, tickets, etc., and hit commit, and you'll see that it comes up right there. These are your positions right here. You can just leave it on default. It'll give you the symbol, what stock you're in, what account you're in, which will be your main account, your only account, how many shares you've got, what the average cost is, your realized and unrealized, in other words, how much you're losing or making. It'll tell you the level 1 information, the bid and the ask, and the withholding buyer power. You don't really need to pay much attention to that. And these are your pending orders, the status, whether it's pending, of course the symbol, whether you're short or long, the quantity, and the the open price, the current price, what route it went through, and just your basic information. This is your feedback information. So you'll use this to know if you've been partially filled. Just remember, you right-click everything. So if you've got an order that's pending and you want to cancel, you can just right-click it and cancel it. So it's pretty basic stuff. So let's go ahead and get started and open up the level 2 and bring up a time and sales and a chart. The 3 main things you need in order to trade. So you'll just click this little icon right here, the montage window. Click that, bring it up, move it right up here. We'll just click it. Obviously, ideally you want to have enough space in order to put this somewhere else besides right here. That's why it's really nice to have multiple monitors. At least 2 monitors is really super good. More than that is really nice. I have 4 monitors. One of them is probably not enough to day trade with, unless you're starting real small, just getting going. You can start to trade, but you're gonna see that you're gonna have a lot of stuff to lay out. So 1 monitor is gonna be really tough. Anyway, first thing we're gonna do is just click right here and put in a symbol. Let's type in WTVI and then enter on the keyboard. And this stock pulls up. Then what we want to do, we want to open a time and sales to go along with this. If you go right here, time and sale, just click on that. It brings up a time and sale window. Let me go ahead and lay this out. I'm going to go ahead and put these up over this. So I've got enough room. And I am going to make this about that big. And all we really need to do is, you see this icon here? That's an anchor icon. Just click on that, left click it, hold it, drag it over to this window, and drop it. Let's see if that worked. We'll change it to EAG, enter. Okay, it did work. We'll go back to WTVI. For some reason it wasn't popping up, so I just right-clicked it. This window popped up when I right-clicked it, and I just said OK to it, and it came up. So what I want to do is right-click it again, go into this window. I'm just going to configure it a little bit. I don't need to know the exchange, so I'm going to take that off. Don't need to know the time, so I'm going to take that off. I just want the price and the quantity, and instead of having this checked for 100, I'm going to uncheck that because I want to know exactly how many shares. So I'm going to say OK to that. Now all I need to do is just move this over by dragging that a little bit. And right about there is fine, so I can make this a little smaller. Right about there. So now I can see the time and sales. This is the price, 0.0365. This is the quantity, 140,000 shares, 50,000 shares, 0.037, etc. It's trading. Now what we need to have is a chart. So I'll just go right up here to this little icon here, chart package, click on that, brings up a nice big chart, and I am going to make it smaller. And we'll put it right here. Hopefully you can still see that. And then what I'm going to do is drag and drop this icon here over to the chart. Brings up a 1-minute chart. If it doesn't bring up the 1-minute chart on yours, simply go right here to Chart Data Interval and choose 1 minute. Or you can choose 30 minutes and see what it's done. Or do a 1 day. You can see that this is actually showing it from yesterday, or actually it's showing it from longer than yesterday, all the way back in December. And you can see it was down here at 1 penny, and it shot all the way up over 8 cents, 0.087 I believe it went to. Today the high was 0.08. And if we look at the data interval at 1 minute again, you'll see that it was at up here, 0.08, and it dropped all the way down. It's down 51.3% right now. So now, since you've linked these together by using this icon, when you change a stock, let's go back to EAG, press enter on the keyboard, you can see that everything changes. EAG, EAG, and EAG. So you want to keep those linked now. Let's go back to WTVI, enter on the keyboard. Okay, this is your basic layout. This is what you're going to need to have. You need to have this for every stock that you want to watch, that you want to trade. Now there's something else that I do. First of all, you want to have as many of these as you can, as many as you can afford to fit. But there's one technique that I use for trading, and I'm going to show it to you later, but it involves using multiple time and sales. So you'll just pull up a time and sales window. See how it's coming up blank? Let's try putting in a stock. Just click right here on the top. We'll put in EAG, enter. Okay, nothing's coming up for some reason, so I'm just going to right-click it. I'm going to uncheck that. I'm going to take off the exchange, take off the time, and I'm going to say save as default right here and say OK. And then I'll just move this over. Now all the ones that I pull up will automatically default to this configuration. So I'm going to keep pulling up some level 2s now. I mean some time and sales. And I'll make them a certain size that will fit on my monitor. And we'll put in another stock, UPDA. Okay, and for some reason it's not coming up properly. Okay, I'm just going to say OK to this, and then it'll come up. I don't know why it's doing that, but it is. It won't do it again. I mean, it may do it for each one of these. Okay, so we've got some time and sales windows here opened up. Okay, for some reason it's saying that you can open up no more than 5 time and sales windows. I think it's just because of this demo. Because in my real account, I can open up 10 of them. So I'm pretty sure it's just because of this demo here I'm using. So I'm going to say OK to that. And what I do is I lay out, a few time and sales. As many as the software will let you lay out. And I believe I have more than 10 laid out. And what you're going to do is you're going to use these off of your scanners to go ahead and pull up stocks with. And then to watch them, to watch the action. And I will show that to you later in the next videos. The necessary tools to use, video number 3 and video number 4, learning to trade. Right now I just want to show you how to lay this software out. And again, you can see that just with the level 2 software alone, it's important to have as many monitors, not just as many monitors, but to use a higher resolution. Like right now, this monitor is set at 1024 by 768, so I can record this video. But normally I look at it at 1280 by 1024, which is normally what this monitor is set to. The higher the resolution, the smaller everything will be on your screen, so you can put more stuff on your screen and lay out more things. And you want as much room as you can possibly use, much room as you can possibly have, because you want to set up as many level 2s, time and sales, and charts as you can, and extra time and sales, so that you can watch as many stocks as possible. Besides the fact that you also are going to have scanners and other various tools that you're going to be using in order to trade with. I will be covering that in the next video, the third video, the necessary tools to use. But for right now, this is just about level 2 and setting it up. I just showed you how to set up the level 2 screen, the time and sales, and the chart, and a couple extra time and sales. Open up as many as you can, as many as the software will let you. Okay, now I need to show you how to use level 2. If you already know how to use level 2, just bear with me, because I need to go over it for those who don't. This is your level 2 window. These are your market makers. You can see DOMS, SBSH, it keeps changing, night, DOMS, SBSH. UBSS, E-Trade, Sally, and on the Ask, SBSH, night, just keeps changing. Okay, the bid, here's your bid, and here's your ask. Let's see, look right here at the price when I click on it. The bid is 0.0325, the ask is 0.033. The bid is where people are placing their orders and they want to buy the stock. Now they could buy right now immediately at 0.033, but they want to get a better price, so they're trying to buy at the bid. The only way that they can get in or buy the stock is if somebody were to sell to them at that price. So now the bid is 0.032. So the only way that they can buy is if somebody sells to them. So they have to wait. These people already own the stock and they want to sell. But they don't want to sell to the bid. They want to get a better price. So they're at the ask waiting for somebody to buy from them. The only way that they can sell is if somebody buys from them. These people here are a combination of what's happening here and what's happening independent. What I mean by that is these trades that are going through, like these 0.033 trades that are in the green, are going through at the ask. So this is somebody just bought 45,000 shares from somebody who was sitting here waiting to sell. Somebody just bought 5,000 shares from somebody who's waiting to sell. Somebody just sold 100,000 shares to somebody who was waiting to buy. Now, just starting off as a trader, what you want to do is you want to always buy from the ask and sell to the bid, because these people are waiting to buy right now. These people are waiting to sell right now. So right now, if you want to get in, you got to buy at the ask. Right now, if you want to get out and sell, you got to sell to the bid. When you get better as a trader, you will learn when there's times to buy at the bid and sell at the ask. But you need to become a better trader for that first. Now you can see the bid just upticked to 0.034. And the ask is all the way up at 0.0355. Now there's a 1.5 tick spread between the bid and the ask. It's because the time of day right now, it's a little bit, the volume is not so good. It's in the middle of the day. It's got a little bit of a spread there. But it'll change as it's trading. Now there's two market makers at the bid, 0.034, and it's jumped all the way up to 0.039 on the ask. Generally giving you indication that the supply to sell is diminishing. Okay, so you know that these people are waiting to buy and they're waiting at the bid. You know these people are waiting to sell and they're waiting at the ask. These are trades that are going through at the ask and at the bid. So let's say that you were to click on the ask and hit the buy button, your trade would go through in the green. Or if you already own the stock and you want to sell and you clicked on the bid and you hit sell, if I actually own this stock, it wouldn't say short, it would say sell. And when I hit the sell button, you'd see the trade go through in red at the bid. Don't let that confuse you. It's very simple. Just once you get it down, you'll understand it very easily. So, let me show you here how you would actually configure an order. So, now with most all brokers, with this kind of level 2, all you would do is you would click on the market maker. Now notice when I click on a market maker here, not only does the price come up, but the market maker comes up right here. Like watch, I'll click on UBSS, UBSS comes up. I click on, let's say I clicked on HDSN way down here. Not only will the price change, but the market maker will change. Watch. Now the price is 0.023, and the market maker is HDS, and it would say N. Or DOMS, DOM, or UBSS. Price changes, market maker changes. All the way up here. Changes to night, the price changes. Or UBSS, or now it's on E-Trade. So you can select whichever market maker you want it to go to. Unfortunately, currently, this software doesn't work like that. Even though it should, it doesn't. I'm going to show you how you need to make it work. SpeedTrader says that they're coming out with an update soon, that this will work like I'm showing you right now. Currently it does not. They say soon it will. And it's supposed to work like this. In order to actually route to a specific market maker, if you just use a limit order, let's just say you click right on this, let's say we'll get rid of this, we'll delete that out, and we'll just click right on a price. So we'll just click right on 034, that's the current ask price, and I hit buy. By default, it's going to go through SBSH. Here's SBSH right here. And I can just tell you right now that just using the default is pretty darn good. But to take it to the next level, you definitely want to route. So for instance, UBSS is right here. Well, you can route to UBSS for free. So let me get rid of that again. You can route to UBSS for no extra charge. So you can just click right here, and you'll need to come underneath here, and you'll need to route to UBSS. Now UBSS is not in here. So what we need to do is we need to go configure it. And I'm going to show you how to do that now. Okay, so let me show you what you have to do here. Like I said, normally you would just click right on the market maker itself, and it automatically changes to whatever market maker you want to route directly to. So you just click on whatever market maker is there, it changes, the price changes, you hit the buy or the sell button. Real fast, real easy. SpeedTrader is going to fix this. I've brought it to their attention. They're supposed to be fixing it soon. So by the time that you see these videos, it may in fact already be fixed. If it's not, this is what you have to do. Come down here. Let's just go in between these two and right click and say route config. Okay. Now for bulletin boards, you would go under U. For pink sheets, it's default. So let's configure our bulletin boards first. So we'll choose U. We'll choose U. Now we need to go back and take a look at what market makers we can route to for no extra charge. And you can see that we can, now SBSH is by default, so if you just use a limit order, you're going to go through SBSH. But we can route to night. So we'll take night, N-I-T-E, and you can see that night is already there. You've got a night for market, which means the M, and the night for limit, which is the L on the air there, on the end. So let's go back to our list. What's the next one? UBSS. So let's look and see if UBSS is already there. It is not. So what we need to do is add UBSS. So just go UBSSL. Now, I don't recommend doing a market order, but if you want, you could put UBSSM. So you've got UBSS market order, UBSS limit order. Now let's go back. What's the next one? DOMS, D-O-M-S. So just hit enter on the keyboard. You'll see that there is no DOMS. You got to be careful here because these are, a lot of these, especially on the drop down menu, are ECNs. You don't want to use those. So let's go put in DOMS, D-O-M-S-L. I don't recommend doing a market order, so I'm not going to put that in. VFIN is the next free one, so we'll put that in. Enter. VFINL for limit order. We'll go back. HDSN is the next one. So I'll type in HDSNL. Go back. LAMP is the next one. So LAMPL. And is lamp already in there? I think it is. Lamp is already in there. So I'll take lamp out. What's the next one? FANC. FANC, L, and M is already in there as well. So I'll take those out. I won't put it in. And VERT is the next one, VERT. V-E-R-T-L. Go back. View is the next one. V-I-E-W-L. Go back. L-Y-O-N is the next one. L-Y-O-N-L. Now what you'll do is you'll just put all of these in up to C-L-Y-P. And I just talked with SpeedTrader, and they just added a new market maker, F-R-A-N, for no extra charge. So that's another one that you're going to put in. We'll go ahead and enter F-R-A-N-L, Fran. That's a new one. So click Apply. Make sure I click that. Quit. Now, you'll see that I'm on WTVI, and you'll see what exchange it is. It's a bulletin board. It's got a U right there. Remember, a U is bulletin boards, and default is pink sheets. So when I click down here now, into this drop-down menu, you can see that I've got, don't pay attention to any of these. You got your limit, you got your market, you got to stop. Don't pay attention to these ones that were up top. These are all ECNs. Okay, you're not going to use those. You can use LAMP. You can use FANC. You don't want to use those. These two. SBSH is already the default anyway. And for some reason, it did not go in. Okay, I'm not sure why that is, but we'll fix it. Okay, let's see. What it probably is that I need to close this and open up a new one. So let me do that. Let me just close this, open up a new montage window, bring it up here, type in WTVI, enter, and let's see if that fixed it. Nope, it did not. Let me figure out why this is. Okay, I figured out what I was doing wrong. For some reason, the level 2 was showing a U there, and it's actually a lowercase u is supposed to be a pink sheet, and the uppercase U is supposed to be bulletin board. So what you do, this is supposed to be a pink sheet, so what you do, instead of going through the U, right-click this, order config, change it to default, and then we'll set these up. We'll set them up right here. So let's do this over again. We'll just set up a few, make sure it's working. Night, we should already have night on here. Let's check it, make sure, yeah we do. Night L. We'll go back. UBSS. Let's see if UBSS is on here. Okay, don't see a UBSS, we'll put that. UBSS L. Go back. DOMS. I know that wasn't there before. DOMS L. Go back. BFIN. BFIN L. Now let's just go see if it's working. We'll click apply. We'll click it twice just to make sure. Quit. So now when we look at it, it should be in there. There it is. BFIN, DOMS, UBSS, ones I just put in. So all you would do then, let's say that you're looking at the level 2 here. You got the ask. The ask is 0.041, and the bid is 0.04. Let's say you want to buy. So all you'll do is click on the price instead of the market maker. Now when this is working properly, you'll just click right on the market maker. That's how it's supposed to be. That's how SpeedTrader is going to change it soon. And when they do, it's going to make your life a lot easier. But for now, if they haven't changed it, when you open up your SpeedTrader account, just click on the price. Choose which market maker you want to go through. Let's just say that right now DOMS is left. So just quickly come down here, scroll down, find DOMS, there it is. Now your DOMS limit buy. And you will go through DOMS and you'll be able to get in relatively quickly. Now, not as quick as if you could just click on the market maker and click buy. See, that's the beautiful thing about level 2. You just click right directly on the market maker, the price and the market maker comes up, you click buy. They have a little problem with their routing in their level 2 platform. They're going to fix it, they're going to change it and make it so that all you have to do is do it the right way and just click right on the market maker. The price comes up, the market maker comes up, you click your buy or sell button. It's very fast. So in other words, you can get in and get out quickly. That's one of the nice things about level 2. Not only can you see the price, not only can you see the market makers that are there, but you can just click right directly on them and get in or get out. Now normally through a normal broker you'd have to route. You'd have to pay so much extra money in order to go right to this market maker. But with SpeedTrader, you can route to 18 different market makers. Actually, there's 19 total. If you don't count SBSH, there's 18 of them now. But if you count SBSH, there's actually 19. We're just not counting SBSH because that's by default. So in other words, if you just, let's say you just clicked right here and you did a limit order and you just clicked on a price, you weren't routing to any particular place, you're just doing a limit order price, you're automatically by default going to be going through SBSH. So we're not counting that as a market maker. But there's actually is 19 different market makers. So let's just say that SBSH was the only market maker on the bid you wanted to sell. All you don't have to do is click the bid price and click sell, and you're going to be going through SBSH. So there is 19 different market makers that you can route to, which is absolutely phenomenal. Really, it's phenomenal. That's why this broker is so powerful. So let's go to another stock, UPDA. Now you notice how I just did that and it didn't change over to these? That's why I need to link these back up again. So I'll just click right there, just click right there. Now they're all linked back up. Now UPDA, you'll notice, is an uppercase U. So that's a bulletin board stock, not a pink sheet. So to set that up, we'll just come down here, right click in between here, route config. Now we're under U, uppercase U, right? And I did already add those in, some of those. But let me just add in like, let's see, see how I got DOMS in there, and VIFN, HTSN, we just did that a couple minutes ago. So they're already in there, and now I'll bring those up, and you can see that they are still in there. The Fran, that's the new market maker that SpeedTrader has, the Lion, the View, FERT, HTSN, VFIN, DOMS. So what you'll do is you'll go in and add every single one of these, all these free market makers, with Fran, F-R-A-N, being the newest one that's for free. And you'll go in here, enter the level 2, the config, and configure all of those, put all of those in, add all of those in into into two areas. The U, which is for bulletin board, and default, which is for pink sheet. Okay? Piece of cake. Just remember, default is pink sheet, and the U is for bulletin boards. Okay, so I'm going to quit out of that. Now, let's see what the level 2 shows when I bring back up WTVI again. It's showing a smaller U, a lowercase u. So your lowercase u's are pink sheet stocks, and your uppercase u's are bulletin boards. So just make sure that, well, actually, you don't even need to know what stock. Just go into here, right-click, config, and just configure them all into the uppercase U and all into the default. And then every time, no matter what stock you're pulling up, whether it's a bulletin or a pink sheet, you will be able to, all your routes will be here automatically. They'll already be set up. All you'll have to do is you'll have to come find which one it is, which will take you an extra few seconds. So it's a little bit of a pain. It's going to take you an extra few seconds to route your orders like that, but still, this is very, very powerful. And once they fix the system where all you do is click right on the market maker, it'll be even better. So, again, let's just try this. First of all, obviously, you're going to need to figure out how many shares you're going to buy. You need to get this in your head, okay, and get a good, accurate feel for how many shares you buy of a stock like this. But let's just say you want to do $2,000 divided by 0.044 gives you 45,000 shares that you can buy. So let's just say you want to do 40,000 shares. Just put in 40,000 and be real careful with your zeros. One more zero is 400,000. So be careful with your zeros. Count them out. You know, say 40,000. 40,000 shares. Just when you click on a price, watch the market change to limit. So click it, it changes to limit. You know what the price is, 0.045. And then all you're going to do, let's say SBSH is already there. So we know that we can buy through SBSH by default. So we'll just click the buy button and you'll get filled really quick. But let's say that SBSH wasn't there. Let's say that just UBSS was there. So just click down here. Instead of a limit order, we're going to route directly to UBSS. Come find UBSS. Here it is. Click on it. UBSSL. Buy. Take you a couple extra seconds in order to route by clicking down here. But no big deal. I mean, you know, a couple extra seconds can hurt you sometimes, but for the most part, the power of being able to route directly to these market makers, even though you've got to come down here in this drop-down menu, is very, very powerful. Again, when they fix this and you can just click right on the market maker itself, whatever one's there, and it comes up right there, and it does route to UBSS, or it does route to Knight, or it does route to HDSN, or Fran, then that's going to be even more powerful and even better. But for now, you can just route right down here and go to whatever market maker you want to go to. Just make sure you set them all up, all 819. Well, you don't need to set up SBSH. It's already set up. And LAMP, I think, was already set up. And FANC was already set up. And Knight was already set up. But just add all the other ones that aren't there. Again, you don't want to use these like Track and Brute and ARCA. Those are ECNs. They're going to cost you 0.003 per share or even 0.004 per share. So stay away from those. Don't use those by accident. Make sure you know which ones you're using. I mean, basically, it'll just start from like right here. So you can just go LAMP and all the way down will be the ones that you'll be using. So, not that hard. You just got to go in there and set it up. That's how you route directly to whatever market maker you want to route to. You can see, for instance, let's say you want to sell right now. The current bid is 0.0455. Well, and only DOMS is there. So how are you going to sell for 0.00455 right now, right away, if you can't go through DOMS? Let's say you're going through Rush Trade, you're going through Knight. How can you sell? You can't. But with this broker, you can. You just come down here, find DOMS limit order, and if you already own the stock, make sure that you've got your shares in there, and you'll see how many shares you've got here in your open positions. It'll show you how many shares. So let's say, just make sure, and one thing nice about this particular broker is if you own 45,000 shares, it'll automatically come up right here, 45,000 shares. Isn't that nice? But you just always want to double check that. I mean, you don't want to sell 20,000 if you really own 40,000, right? And if you try to sell more than what you actually own, it'll come up with an error on you. But this broker's really good because it automatically does that for you, which is real nice. It's one extra step you don't have to worry about. Okay, so now let's click around the price, see what the price is. It's 046 on the bid, 0465 on the ask. Again, DOMS is the only one there at 0.046. So being able to route directly to DOMS is really nice. You can also route to VNDM. You just have to set it up. Let's see, here's VNDM. It's free. We haven't set that one up yet into this level 2. But you just set it up on yours, and you'd be able to route directly to VNDM and go right through them and sell. Or let's say you want to buy right now, and there's 2 of them you can go through. See, the yellow, it all represents the same price. The next color in green, or the next color in blue, is going up a level. 0.047, 0.049, 0.05, 0.0515. In other words, it's just a graphic representation of the different price levels. So we know that both of these market makers are at the same price, 0.0465. Now, there are times when you don't want to route to night, and I'll explain more about that later under Learning to Trade, but I'll just briefly explain it right now. When there's a bunch of people trying to get in, let's say that the stock is bottomed out and it's turning back up, well, everybody else is going to be seeing that too. And a whole bunch of people are going to be pressing the buy order. And a whole bunch of people are going to be going through night by default because they can't go through anybody else. So in other words, there's going to be a whole bunch of people trying to go through one market maker trying to get filled. So when you're trying to buy at the ask, as a general rule, don't go through night unless you absolutely have to. That's the only market maker there. But don't go through night because you're going to be competing with everybody else. Select one of the other market makers that you can go through. Not the ones down here. You can be going through a bad price. I'm talking about the current price in yellow. So let's say there was night in UBSS, which there just was a few seconds ago. Choose UBSS. Just click on the price, 0.0465. Come down here, and you would have, or there it is right there, UBSS already selected, and hit buy. Already configured, and hit buy. And you'll be going through UBSS. So you don't have to compete with everybody else. Same thing when you're trying to sell to the bid. Try to stay away from night because everybody else is going to be selling to the bid, going through night as well because they have no choice. That's the only place they can go through. When they hit the sell button on their platform, they're going to be going through night. They have no choice. So you understand that you don't want to have to compete with all the other people going through the same market maker. You want to go through one of the other ones because one of these other people are trying to buy, and they happen to be going through another market maker like MAXM or VNDM. They're going through somebody else. Everybody's selling. They're taking out night, but there's still other shares available other places. You can route to pretty much any place you want to route to. So you could click on 0.047 and route to DOMS and hit the sell button to get out through DOMS or get in through UBSS. If you keep watching this, you'll see, like, for instance, here's UBSS at 0.0475, and night will come in on the bid at 0.0475 at the same exact price, because night and UBSS don't do business with each other. But if you can buy through UBSS directly, you can just get the shares directly. You don't have to sit there and wait. In a fast-moving market, that makes all the difference in the world when you're trying to sell out fast or you're trying to buy fast. 0475 is now the bid. 048 is now the ask. Okay, so let's say you wanted to buy right now. Night's the only one available. Well, then just go ahead and route through night. Night limit order 048, 40,000 shares, buy. And you do want to make sure you configure this right. Make sure you got your shares right. Make sure the price is right. Click right directly on the ask or on the bid if you're selling. You can see this thing's moving up here. See by that chart. 0.0485. Always keep clicking on the bid price so you can see what it is down here. Click on the ask price so you can see what it is down here. Don't go by what it's showing you. Actually click on it and see what the price is. Back and forth. And you can see that the greens are going through at the ask, the reds are going through at the bid, and these whites are going through in between the bid and the ask. In a fast-moving market, you can use those whites to give you clues on if it's going to go up or down. I'll explain a little bit more about that later. It's pretty advanced. Like, let's take a look, see how you can see that. What that means is it's a bullish sign, because what it means is there was people who were already bidding 0.05 before the level 2 was showing 0.5, and there was prices going through. Since the ask was 0.051, you could see that there were people bidding, and when there's people bidding, that's demand for the stock, thus it's going up. Vice versa when it's going down. Anyway, that's a little advanced, and I'll cover that later. This video is just about teaching you how to lay out this software. And so far I've taught you to lay out the montage window, your time and sales, and your chart, configuring your order config so that you can route to different market makers for no extra charge. And this is pretty much it. This is what you need to have. This is what you need to know. Another useful thing, especially if you're going to be gapping, is to use this market clock. I'll click on this, and you can see there's 2 hours and 17 minutes and 36 seconds to the market close. If I open this up to market close, so we can just keep this clock just like that and put it somewhere on your monitor, and you can just leave that open so that you know when the market's going to close. When you gap, you buy a stock in the last minute, and it's very useful to know how far away you are from the market close. So it's one of the things that I use. Other than that, that's pretty much it. There is a news streamer through here. It's right here. We can click here, and it brings up news window. We can make that a little smaller here. And you'll see the news come up here, and it reads the headlines down here when you click on it. You can use it. There are times in the market where watching the news and playing news plays is really good, but generally I don't really use news very much anymore. I completely rely on my scanners in order to find stocks. I'll go look up the news manually at Yahoo is what I'll do once I find my stocks on the scanners, and that's a superior way of doing it, because, like, for instance, here's one, PRU, and you can come down and read the news. What'll happen is you'll be reading news all day long, and 99.9% of all the news is irrelevant or no good, or it's just some news that's not really going to do anything. What you really want to see is stocks that are moving, making higher highs, stocks that are getting volume, and a lot of times stocks will move without the news. In other words, by the time the news comes out, the stock has already moved because a bunch of people have already knew about it before. So I'm going to show you how to find those stocks without relying on the news. Let everybody else rely on news plays. I'm going to show you how to make money at this market without having to even rely on that. You're going to have to work just as hard by looking at your scanners, but it's far superior, and I'm going to show you how to do that. Now, just to teach you a little bit about this level 2, it's real easy. Here is your level 1 information up here. You've got your high, which is 0.08 today, and you've got your low, which is 0.028. So that's a pretty big high and low. You can see it went all the way down, and then it's gone back up. You've got your previous close, PCL, which is 0.076. That's what it did yesterday. It closed at that. You got your last, which is 0.054, which is right here. You've got what it's up or down for the day. It's in red, so it's down 30% today, 0.3. Or if it was up 30%, it would be green. You got your volume, 64 million. You got your exchange right there, which is a pink sheet. Lowercase u is a pink sheet. Uppercase U is bulletin board. And your this is your level 1, which is your bid and your ask. It's useful information. Mostly I just look at what percentage it's up or down, what its previous close is, what its volume is, what its high and low is. That's basically all I pay attention to. The real information is here. Here's your bid, which is 0.035. Here's your ask, 0.054. And your market makers, where you can get in, where you can get out. Also, you can tell the supply and demand somewhat by looking at the market makers. Now, you can't tell by the shares. Notice how all the shares is 5,000, 5,000, 5,000. In over-the-counter world, OTC, BB, and pink sheet stocks, they're not going to show you how many shares are there. That's another reason why you need to watch how many are going through, how many are selling, how many are buying, to get a feel for how many shares are there. You can get like for instance, if you see reds going through like crazy and there's one market maker sitting on the bid, just buying, 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 and the market maker doesn't disappear, you know that the stock is being accumulated. Vice versa, if people are buying, 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 on the ask, greens are going through, and there's one market maker sitting on there and it doesn't disappear, that's a sign of dilution. Like the company is selling a bunch of shares. So you can use that to give you clues on what's going on. If the stock is being accumulated, if the stock is being sold. Being sold covertly, in other words, they could sell right to the bid, but they're getting people to buy from them, or they could buy right at the ask, but they're getting people to sell to them, and they're just accumulating quietly or selling quietly. Very useful to see that happening, so you can get a feel for what's going on. So that's pretty much it. You just want to set up your routes down here. I just keep it on day. I always keep it on any. Don't use all or none for bulletin boards and pink sheets. The market makers really don't like that. You just leave that's your account, and all you do to change the price is click around the price. If you don't route to any place in particular, you'll be going through, and make sure you look at that. You'll be going, if you use a limit order, you'll be going through SBSH. Or if you click on a price and then click on a market maker, you'll be going through that market maker. So right now I've got UBSS and SBSH on the ask, so I'll route to UBSS. UBSS is still there, and I can click the buy button, and I get in within a few seconds. You see how that keeps changing. So that's another thing. You can see there's 4 market makers on the ask. So you can see that supply right there. See how it just down-ticked? Because you showed all that supply right there. There's only 2 market makers on the bid, which is your demand. And this is constantly changing, up and down, up and down. You got your supply, you've got your demand. Let's just say that all of a sudden, this thing just lit up like a Christmas tree, and you've got like 8 different market makers all in yellow. It would show a demand for the stock, and then a bunch of greens went through. Or vice versa. Let's say that a bunch of market makers came in on the ask, all in yellow, and a bunch of reds went through to the bid. That would be a lot of supply for the stock. In other words, probably going to go down. Or vice versa. If there was a lot of market makers on the bid and a lot of greens going through, it would probably go up. And that's pretty much it. This is what you need to know in order to lay out your level 2. Pretty basic stuff. Just the ability to be able to route very quickly, be able to route to different market makers, to see the supply here, the demand here, to see what the prices are, which market makers are where, have your chart up so you can see what it's been doing, making lower lows, made a low here, and made another low here. It's bounced pretty good off of that low, but if it were to come down and go down even lower, it would make another low, so you would get 3 lower lows, or vice versa. You might get 3 higher highs. You might get a double bottom down here. If it comes down and bounces off that bottom, you'd get a double bottom. Just basic chart stuff that you're going to use to play the charts with. Anyway, this is the conclusion of the second video, learning to use Level 2 software. you just wanted to go over that and set up your layout. You can see the importance of using multiple monitors. I mean, the more monitors you have, the better, because we're going to be bringing on even more tools. We're going to be setting up some scanners, so you're going to need even more room. And you really want to trade with that showing right there, so that you could always see what your open positions are and how much money you're making or losing, and what your pending orders are. Maybe you want to cancel that order. Like let's say you go for 0.048 and it just moves too fast on you and it's still pending and you missed it, so you can just right click it and cancel it. So that's the conclusion of this second video, learning to use and lay out your level 2 software and the basics on how to read the level 2. I believe I've covered that enough. Let's just do a test trade here. We'll click on the price 0.048. We'll go through UBSS, 40,000 shares, and hit buy. So what just happened is it just in a demo here just bought 40,000 shares of WTVI at an average cost of 0.048. My unrealized gain is minus $80 right now. And the bid is showing, it's just the level 1 information, 046, 047. I'm in a margin account. And don't even pay attention to that. Just make sure you're using your cash at all times. The commission cost was $7.95, and I've done 1 ticket so far. So that's pretty much it. And then you can see the sell button came up. So if I want to sell, let's say I want to sell to 046, I'll just go through the same market makers. I haven't set up MAXM, which I believe is available. MAXM is free. After a while, you get to know all these. And you just, I'll just go ahead and sell right here. Negative $80. I'll sell out 40,000 shares. Now let's just say that, let's say I get rid of this. And let's say I go over to EAG. Okay, everything changes. EAG is 1,000 shares. So let me go back to WTVI. You see how it automatically came back with 40,000 even though I got rid of it? That's because I own 40,000. So now I'm down 120. So I'm just going to sell out at 0.045 and sell. Execute sell 40,000 WTVI 0.045. And it sold me out already. I had 2 tickets at 15.19. So that's basically how you do this. There's not much to it. I think I covered everything. Now, what I'm going to do is come back in the next video, and the third video, which is going to be the necessary tools to use. And I'm going to show you the real secret to trading. And that's using scanners. And I'm going to set you up with my custom scanners. And how I do it. Basically, I'm just going to show you how I do this. And using the charts over at Yahoo and checking the news over at Yahoo. Basically how I do it. I'm going to show you the real secret here on how you trade, how you find stocks every day, and how you watch them, and how you check to see what's moving, and how you watch the level 2. And I'm going to show you how this is done. So this is the conclusion of the second video, learning to use level 2 software, laying it out. And I will be back in the third video, the necessary tools that you must use before I come back in the fourth video, which will be actually learning to trade. So this is the conclusion of this video, and I will see you in the third video, the necessary tools to use. Hi, welcome to the third video, the necessary tools to use. In this video, what we're going to cover is setting up your scanners, using the charts over at Yahoo, and checking news over at Yahoo. These are the 2 main things that you need to have in order to trade these stocks, and I'm going to show you exactly how I do it. The first thing that you need to have, which is essential, is TraderBot.com. You need to go here. You can come down here and subscribe. They'll give you a preview special free for 7 days, and the monthly cost is $39.95. That's what I pay. It's a great website and program, and I'm going to show you how I use it, and I'm going to give you my custom scans so that you can just copy them and you can see what I'm seeing all day. But this is the secret to trading. This is how you're going to find the stocks. This is how you're going to make some serious money in the market. Okay, so once you have your account, you have it up, you can log in. Now I'm going to go ahead and log in while I pause the video for a second, and after I log in, I'll be right back. Okay, I'm back. I've logged in. This is the screen that you're going to see when you first log in. And what I want you to do is go to My Bot. Just click on that. Just waiting for it to come up here. Okay. Okay, it's been so long since I've actually done this, because I've had these scanners going for a long time. I don't remember if the movers scan here comes by default inside here, and if the cheap breakout scan comes by default. Those are the two main scans that I use. I also use the Dead Cat Bounce scan, but I don't really use it that much anymore. Mostly I just use my mover scan and my cheap breakout scan. That's all you need to make a bunch of money in this market. So if you don't see a cheap breakout scan and you don't see a mover scan, just go to here to customize power searches. Click on that, and I'll give you my custom scan settings here. Just put all those in here, and then come down and say add to my bot profile, and I'll ask you to save the search as, just name it either the mover scan or the breakout scan. Name it one of the two, whichever one we're doing. So I'll go back. Let's first go to the mover scan, and I'll come here to edit. Okay, so these are all my custom settings here, and you're going to want to just copy these. You can modify this a little bit if you'd like. If you'd like to follow stocks that are even higher, for instance. But this is a very good scan, and it's made me a lot of money, and it'll make you a lot of money if you just copy these. So just go into if it's already there, if there already is a mover scan in there, then go ahead and go in there into the mover scan and copy it like this. If not, just customize the power searches, copy these settings, and then go ahead and call it a mover scan. Basically, this is going to show you stocks that are just starting to move, and you can make a lot of money from your mover scan. So this is a very important scan. So I've got all checked here. You know, because sometimes some cheap Amex stocks start moving and I want to jump on them, or some NASDAQ stocks and I want to jump on them, but mostly this finds OTCBB and Bulletin Board. So prices between $0.01 and $10. You know, if your preference is just to trade stocks under $5, then you can just change it to $5. Volume is greater than 50,000 volume. You can see, just go ahead and copy all of this. I have this one checked. Stocks that have gone between 5 and 100,000% in the last 2 minutes. Then down here, you can see volume percent gain over the average daily volume is between 10 and 100,000%. Average volume minimum during last 3 minutes, 20% higher than the average volume minute for today. Just go ahead and copy all of this. All the ones that are checked are the active ones. So just copy it just like you see it. 1 minute interval to refresh, 10 results, got the basic, and then save the search as, or I can just update it right here, but I haven't changed it at all. So again, you can just pause the video and you can see which ones are checked. Starting from up here, all, just copy all of that. All the ones that are checked here is the ones that you need to do. So you can see. And then these, just make sure it's just asking you how often you want to refresh it. It's just a real, it's a basic scan, but it's the way that you program it. So it's going to find you the key stocks. And this one's set up really, really well. It takes a while to get it right. This one's set up right. So just go ahead and copy it just like that, and then save it as a mover scan. And I'm going to go back to my bot again, and let's go set up the breakout scan. I'm calling this one cheap breakouts, and let's go ahead and edit that. Okay, so go ahead and do another one like this, and call it, you can call it breakouts if you want. Prices between 0 and 10, greater than 200,000. Just copy it just like you see it. Stocks that have gone between 100,000, 2 minutes. Last price is within 5%. Today's high. Just go ahead and copy it just like you see it. You can pause the video if you need to, and just write it down. Or just not write it down, but just put it right into the scanner here. And you can see that I don't even have any of these checked. 1 minute interval, 10, and basic. So all of your stuff. And if you want, you can play around with this, but you don't need to. I'm just telling you that right now. These are done really well. They will find the stocks that you want to find, and they'll give you a lot of trading opportunities. It'll find just about everything. So just copy that down. You should be able to see it from the video, no problem. Just pause the video, put it in there exactly like you see it, and save it as a breakout scan. Okay, and I'm going to go back to my bot. So what you do then is every morning you just log in, then go up here, go File, New, Window. Okay, and a new window comes up. So now you've got two of them. Now I'm going to go back to the first one. Okay, so what I'm going to do is I'm going to put Find for the mover scan. Click on that. It brings up two stocks right there. The market's closed right now, by the way. And what I do is just go like that. And I have a program that keeps everything on top. Stay on top, and I just click on it right there. I'll tell you what that program is in 1 second. Okay, here's that program. It's actualtools.com. And I think they give you like even a 30-day free demo. Actual title buttons is what I use. And it gives you these buttons up here. These ones I don't use, but I use to stay on top. And it's real useful, as you can see. So just go to actualtools.com and you can go get that for yourself. It's something like $15 or something like that, and you buy the software. So I'm going to click off of there so I can keep this on top now. And what I'm going to do is go back to the one behind. I'll go ahead and take the on top off, go back to the other one, and click on Find for cheap breakouts. And then again, I will go ahead and make this smaller. And I'll put that on top, and I'll put that one on top. So now I've got two scans going. this is really all you need. You can do a bounce scan as well, but you don't really need to. Now I've brought the software up from behind it. So, as you can see, having enough room becomes real critical real fast. So, you can't even see that one over there. I'll just put this over here. Okay. So, now you can see. Let's just pretend like we've got a bunch of level 2s open. And let's just say you only had one monitor. You could still make this work. It'd just be a lot harder. I mean, for instance, you could make this a little smaller. And then you'd have this open right here. Now this is a 19-inch LCD, but I've got the resolution all the way down to 1024 by 768. So it's fairly small. You could, even on a 17-inch monitor, you could probably make it smaller than this, where you could fit more stuff on the monitor. Like, for instance, you could even make this level 2 smaller if you wanted to, this montage. I could just make it smaller and still make it work. But I'm going to keep it like it was. So anyway, just lay this stuff out as best you possibly can. And this is what you do. All you do is you watch your scanners. They're going to refresh every minute. You've got your mover scan on the left. Mover scan. You've got your breakout scan on the right. Basically, that means that these stocks are just starting to move. These stocks have broken out. They're having more and more volume. They're making higher highs. They're breaking their highs, their high up days. They're breaking out. They've broken out. They're in free territory. These are just starting to move. So obviously these you want to jump on and really watch them, because one of those could be a big winner. And these you want to constantly also watch as well, because stocks that have broken out could be good plays. They might come up, break out, make a nice dip, and you might want to get in and have it go higher. So basically what you do is you just sit here all day and you just check stocks. You just check them, like ABRG. Okay, you see the chart? It's kind of gone down. It hasn't really gone up. Its high was 64, its low was 58. Its last trade is 58. The market's closed right now, so I'm not sure if I'm seeing the correct data. Let's look at DYAX. It's down here. Okay, DYAX. It's not going to give me any new stocks because the market's closed. Okay, so here you can see one that's broken out. Again, the market's closed, so you're not going to see it trading right now. But its high was 459. Its low was 368. Now, it's very possible that you could have saw this stock on your mover scan right when it first started to move. Or perhaps on your breakout scan when it was up here and it was telling you that it was breaking out, and you could watch it and you could make a trade on it. So not only does it show you trading opportunities within the market, but another thing that you're going to want to do, I need to bring this up a little bit so I can get down here, is bring up Yahoo. So let's go over to yahoo.com. Okay, so I have yahoo.com up. I'm going to click right here on finance. Okay, enter symbols. Let's look up DYAX. DYAX. Enter the keyboard. Okay, and as you can see, there's more reason to have, here's the chart. See, I had a nice day today, up 14.61%, 58 pennies. And let's see, today is Thursday. Did I have any news before that? Nope. 5 low-priced, high-start stocks. So it looks like it was profiled by Motley Fool today at right before, 45 minutes before the bell, which was right about here. And as you can see, that's when it made its real run. It was right there. Somebody probably got wind of it early, started buying it, and then 45 minutes before the bell, it made a run. Probably on whatever this news is. So you just need to check that news and see what it is. And that's basically what you're going to do all day long. All you're going to do all day is look at your scanners, have these robots watching the market scanning all day long. You see stocks that come up, you come in and check them. You see, you want to make sure that they've got some volume, that they're getting some action. Then you come over to Yahoo, bring Yahoo up, and see why they're moving. Do they have a reason to be moving? Did they get news just out? Like, 45 minutes before the close, this news came out. You could have seen it moving, see it starting to get volume. Doesn't have very much volume, though. But that's what you're going to do all day long. And you're just going to watch the stocks, see what they're moving on, and basically, trading is all about is just getting yourself in stocks that have an opportunity to go up and not holding them going back down. All you need is a good winner. In other words, if you jump in and the stock starts to go back down, let's say you jumped in here, the stock starts to go back down, you need to get out. Okay, and then it bounces up and goes even higher. Okay, well then at some point you decide, okay, well I'll take a chance again, I'll get back in. Well, if you would have, and held on to it, you would have made a nice profit. The real trick is not to hold them going down. Don't hold them going down lower and lower and lower, hoping they're going to go back up. Don't do that. If you get in and it goes higher, let's say you got in here, or here, or here, it would have went higher for you the whole entire day. There would have been nothing to it. Just don't hold them going down. Like, for instance, I'll give you a good example. Let's look at this other one. Remember this one earlier? I mean, imagine that you bought this at 0.07 and then you held it going down and you were hoping that it was going to bounce, and then you held it going down and you're hoping it's going to bounce, and then it gets back up here, you get all excited, all right, I'm going to get back to even soon. And then it just does what? Goes back down. Trading is all about getting yourself in a stock that has an opportunity to go up. But if it starts going down, you just get out. Take a small loss and get out. If you get back in and you hope it's going to go up, but it goes back down, you just take another small loss. That's what you have to keep doing. But you'd be surprised if you keep jumping in stocks that have a chance to go up. When I say a chance to go up, you're looking for an increase in volume. You're looking for stocks that are getting higher highs. So a stock that's going up, dips back down, and then goes up higher than where it was. As soon as it breaks that previous HOD and goes higher, that's where you want to buy. But then if you buy right there and it starts going right back down, you got to get back out. You can't hold them going down. That's the number one rule. If you could just get that rule down and never ever do that and not be afraid to jump in if it looks good, you'll make money. Simple as that. So these are your necessary tools. You just need to have your scanners running. And again, they're not doing anything right now because the market's closed. And you need to have your level 2, your time and sales, and your chart running. And as many of these as you can. So for instance, let's say that you've got plenty of room here. And what you can do is take these time and sales here and just start putting stocks in there. So DYAX, because not all stocks, especially on your mover scan, are going to be moving right away. They may take a while. So you want to sit there and just monitor them on your time and sales. So if you start seeing some trades going through and it starts to look more and more bullish, you can come up here and bring it up on your level 2 and go DYAX and then actually see the chart and watch it and decide to make a trade on it or not. Just remember something very important that I'm going to explain later, try to hammer into you. You always want to try to buy a dip and sell a spike. You never want to buy a spike. If you do, you never buy a spike, but if you buy it going up, let's say you bought it right here. Okay, you have no idea if it's going to keep going higher. That may have been the high right there. It's going to go back down. Just remember, it's okay to buy it right there. But if it does start going down, right when it first starts going down, just get out. If it bottoms right here and it starts going back higher, you can get back in by all means. But you don't know when the low is going to be. You don't know how low it's going to go. Never guess, never hope. If you get in and it keeps going the right way, great. If you get in and it starts going the wrong way, get out immediately. I mean, think about it. If you got in right there and it went down, you got out right there, you'd lose some money, right? But if you got in right there and then you held it to the end of the day, let's say you sold it before the close, from there to there is a lot more money than you would have lost from here to here. So that's the real trick. And how you find stocks is so simple. You just use these scanners. That's it. There is no other way. There is no other way. This is the only way. And it's the best way. It is the way that you make money. Believe me, these scanners will bring you opportunities all the time, every day. It's just a matter of, how hard do you want to work and look up these stocks all day long. I can tell you this, I have a strategy for just doing this for like the first half an hour every day. If you can just be at the stock market for the first half an hour every day, you can follow these scanners and get yourself into 3 or 4 possible stocks. Just put $500 into each one of them, and if they have a day like this one, and it went up 550%. Now imagine you could have caught that at, let's say you could have caught it at 100%. Okay, instead of 550. And you would have put $500 into it. Not too much money. Actually, this one's so cheap, you probably would have put less. Just to say $250 into it. But still, I mean, a 400% profit, and you'd have made like $1,000 today on this one stock without risking very much money. Now that's kind of an exception, but these stocks do go up 100%, 200%, 300%, 400%. They do it. And all you need to do is just hit one with $500, one a day, and you'd make $500 a day. So when you get them off of your mover scan. Now I'm going to show you that technique in the last video. But for now, I'm just showing you the tools that you need to use. This is very simple. You just need to have these 2 scanners going and have your level 2 going, and you can make a lot of money at this. So, that's really the conclusion of this video. Just wanted to show you what tools you need to have. Got your level 2 set up. You got your scanner set up. We're ready to go. So I'm going to conclude this video, and I'll be back in the next video, which is going to be the 4th video, Learning to Trade. And we're going to cover a lot of different things. Actually, the techniques on how you trade. So, that's the end of this video, and I will see you in the 4th video, Learning to Trade. Okay, welcome to the 4th video, Learning to Trade. Now I'm going to show you how easy it is to trade. All you need to have is the right tools on which to trade with. That's the secret. The secret is having the right tools, having a little knowledge, and having the mental discipline and the patience to trade. That's all it takes. So as you can see, I have 2 scanners running right now. One of them is the mover scan. The other one is the cheap breakouts scan, or just we can call it a breakout scan. This particular scanner is not updating itself properly. It's because I have so many things running on this computer right now. It sometimes does this, but most of the time all I have to do is log back out and log back in, and it would probably start working. Or I've got so many things running that's why it's keeping it. This one is updating itself properly for whatever reason. You can also manually do it just by clicking refresh, and it will show you stocks. This is how you find all of your stocks every day. So ideally, you would have it so that you could see all of this at the same time. You could lay it out like that. I don't really need to, because it's usually just the top stocks that are any good. This one, its last price was 75 cents. It's changed 23 cents. It's changed 43%. It's only got 94,000 volume. So that stock's no good. And we can go show it to you. TITAF. Let's go take a look at it. TITAF. Enter. You can see the spread. It's now got 101,000 volume. It's got a big spread on it, 65 cents to 79 cents. So it's a huge spread. You can see the chart. It's not virtually doing anything at all. You want to find stocks that have got some volume. Now on your mover scan over here, you got to remember, you got to be careful with that because they could have a very small amount of volume just starting off, but then they pick up and pick up and pick up, maybe because they have news. On this one, on your breakout scan, you want to see more volume. Like this one's 17% up. It's got 625,000 volume, which is not that much, but it's possible it could be a mover. So let's go take a look at it. WITM. WITM. Okay, this one, the spread is pretty tight. It's got 4 market makers at 50 cents, 1 market maker at 50.5 cents, these 3 market makers at 51 cents. Okay, this looks like it's, it could be something. Here's the chart on it. It started off at 46 cents, went up. It's still close to its HOD. Its HOD, high up day, is 52 cents, which is right here on the level 2. So it's possible this thing could be something. So let's go take a look at it. And it's just upticked here. Now we've got some movement over here too. So this thing could be something. So the first thing we need to do is go find out, why is this thing moving? Is there a reason? Let's go to Yahoo Finance and go find out. Okay, I'm at Yahoo here, and we'll go to Finance. Okay. Okay, let's type in WITM. And here it is. We'll just click right here. Okay. Let's go find out why it's moving. Okay, I need to move these scanners out of the way. This is why you need multiple monitors and a higher resolution than what I'm recording these videos at, because you need room. So, here we go. WITS Basin updates current developments related to merger progress and acquisition of China mining properties. Now, anything that has to do with China can be a real big runner. So let's go take a look at this news real quick. It came out at 7:13. That's Eastern Standard Time, so that was before the market even opened. Okay, just quickly running through this. Shareholders plan merger with EasyNet and potential acquisition of existing cash flow properties in the People's Republic of China. Okay, that could be something. It doesn't really tell us a lot, but that could be something. So let's minimize that. Let's pretend like we've got plenty of room here, and we've got our scanners running. We've got our time and sales running. And you can see that this thing is, it's up 17.4%. It's got 954,000 volume right now. This thing is a possible mover. It's something that I'm going to want to keep my eye on. So what I would do is just come right down here to one of my time and sales, and I'd have as many of these running as possible. And I would type in WITM. That way, for the rest of the day now, I can keep an eye on this stock. And if this thing keeps moving up, I would go ahead and jump in. A good place to jump in is if the stock can break its HOD, its high of day. In other words, here's the chart. It went up, and we caught it here. We didn't see it until here, let's say. Well, it's going to have a hard time naturally to break this high right here. Why? Well, because people who are in it, people who are trading it, people who caught it early, let's say, they're going to put their orders here at HOD or right before HOD, high of day, to try and get out. Because there's going to be a natural resistance, almost like a self-fulfilling prophecy, where there's a natural resistance at HOD. So, by default, if a stock can break HOD, that's good. That means it's strong. That means it's probably going to make a higher HOD, go even higher. Now, HOD breaks are really good to play. There's only one problem with them. Sometimes a stock will break HOD, and then it will go back down again. You don't want to stay in a stock that's doing that. If it breaks HOD and you buy, that's fine. Just make sure that if it starts going back down, you sell right back out. Just as quick as you bought, you need to sell. I mean, it's a bummer. You're gonna have to take a loss. You know, nobody likes taking losses, but you better get good at it, because if you don't get good at taking losses within the market here, you're not gonna make it. You're gonna fail. So you need to become a professional at being able to sell. Anybody can buy a stock. Anybody. It's easy to buy a stock, and lots of people buy stocks. What few people can do properly is sell stocks. You wouldn't believe me if I told you that people never, ever, ever call unless I'm recording these videos. I don't know why that is. Anyway, so let's take a look at what just happened now. Now, all of a sudden now we have 2 market makers that just came on the bid. And we have 4 market makers now on the ask. These guys are lining up here. They want to sell. They want to get out. We've got 2 at 52. This thing, you know, just taking a look at it here, has some potential. Okay, one of the market makers dropped off. We've only got 1 now. And, okay, here we've got some buying now. 4 market makers. Now, what we want to see is there was only 1900, 1750, 5750. So it's not like anybody's loading up on this stock right now. There's no big buys. There's no 50K buys, 100K buys, 200K buys, nothing like that. There's not even any 20K buys. So we had some 10 here and a 10 here. We can come down and take a look at what else was bought. Not anything big. That doesn't necessarily mean it's bad, though. But what we're looking for now is how many shares are here on the ask. See, with this is a bulletin board. It's got a big U, uppercase U. They won't show you how many shares are here. It's not like a NASDAQ stock or an Amex stock or New York Stock Exchange stock where they'll show you there's 20,000 here, there's 50,000 here. It won't show you. So you have to watch the time and sales with the level 2 to get clues. And what we want to see here is how many shares are there with these 4 market makers? Is there 10,000, 20,000, 100,000 shares sitting here? Are one of these market makers a diluter, or, you know, selling a bunch of shares, 100,000 shares, 200,000 shares, 500,000 shares, no end, no limit? Or vice versa, will all of these market makers be gone if just 20,000 more shares are bought? You see what I'm saying? We want to get a feel for what the supply is over here, and then what the supply is here. Stocks that run up easily and move up easily won't have a lot of shares for sale at the ask. I mean, sometimes they will, but as a general rule, the easier they're moving up, the better. So that's what we want to watch, okay? 4,000 share trade just went through at 51. Now, the current time is 12:24 Eastern Standard Time. And generally speaking, this is a pretty slow time in the market. This stock is getting a little action. It's got some news. It's getting more volume. It's up 18.6%. It's got news out that has something to do with China, and I can just tell you that stocks really like to run anything that has to do with China, because China is such an expanding market and stuff. So I'm really keeping an eye on this one right now at the moment. And the chart looks pretty good. We can go check out some more stuff here. Like, for instance, let's go take a look at Yahoo, okay? And let's go take a look at what its 52-week range is. It's 19 to 57. And currently, it is at 51 cents. So it's getting close to its 52-week high. Let's go take a look at what it's done in the last 5 days on this chart. Let me just move this scanner over to another monitor here real quick. Okay, I've got so many things running, and these videos at the same time. Okay, here we go. Plus, Yahoo hasn't been doing good. Okay, so you can see what it's done. It was selling off, going down, and then it gapped up this morning on that news. So that's bullish. Doesn't necessarily mean anything for sure, but that's bullish. Now, what you can see here, let's go take a look at a 1-year chart now and see where we are with respect to 1 year. Okay, you can see this thing, when it does go up, it likes to move. It also comes down, goes up. It went up just very, very recently, in January, it looks like, and it went up pretty darn good. It came back down, but you can see where its resistance is. It had resistance here at 50 and then went back down. It broke that resistance and went up here just a little bit higher, up to 57, went back down. So now the magic number is 57. If this thing can break through 57 on news, it's very bullish. Let's just go take a look I usually don't look at the 2-year, but just to take a look at it. Yep, even its 2-year high is even 57. So, we just want to keep an eye on this stock. Doesn't mean anything at all. This stock could go nowhere. But the fact that it gapped up, it's getting some volume. Its average volume is 746. So what we really want to see is it do 3, 4, 5 times its average volume today and close above its 52-week high. That would really be nice. But let's just go see if it's maybe a trade. The only thing that's risky about this stock is it's so close to its 52-week high right now, and it's going to have a hard time trying to break through that, just naturally. Although you don't see that by the level 2. It jumps from 54 to 58 to 59. Then we've got a lot of resistance here at 60. Well, according to the level 2. There could be hardly any shares there, but just from the level 2, we've got a lot of market makers there. You have to use the time and sales with the level 2 to give you all kinds of different clues. Clues about whether there's a market maker accumulating. And you can see a bunch of sells going through. And maybe this market maker, CARR, is just buying like crazy. It just keeps buying, it keeps buying, it keeps buying. That's very, very bullish. Vice versa, there could be a market maker here on the ass that just keeps selling and selling and selling and selling. It won't stop. People keep buying and buying and buying, but it won't make it any higher because this market maker just keeps selling. That's bad. That's a sign of dilution. Okay, we just got another sale for 300 shares. Not much there. But this stock is worth watching. So I've got it here on my time and sales. I would watch it now. So bring back my scanners. And this one's not updating itself properly, so I'm just going to manually do it. It didn't find anything. I'm just going to do it again to make sure. Okay, this time TRDY came up. 1.8 million on 650,000, but it's down negative 12%, so I won't even bother looking at that. Anything that's negative, I won't bother looking at. On this one, let's see, there's only something's up 1%. I won't bother looking. I'll just wait. The best thing I see right now so far, this one is updated. This one's up 3%, but it's a little expensive, $8.44. I've got these things, this scanner done for $10, but normally I would just have it for $5. I changed it to $10. Stock market was slow, but there's not that much stuff that moves from 5 to 10, so I don't really pay much attention to it. So right now, this is the best stock that I see. I'm also keeping an eye on some other stocks. ETIM. Just watching it to see what it does. And it's what's nice, you don't have to have everything going. You don't have to have a chart going. You don't have to have a level 2 going. You can just watch it on your time and sales. You can see the price, and you can see the action. And that gives you the opportunity to pull up more stocks so that you can watch even more stuff. You can see by the scanners that things are kind of slow right now. Okay, the mover scan here just got FCRZ. 67% change, but you can see on very little volume, so it's really not worth looking at. But what you can do, I need to move these scanners over here. What you can do is just punch them up here and watch them. But I can tell you right now, just looking at the time and sales, it's terrible. Let me come up here. Look at where it's jumped all around. Let me pull back UPDA and go up here and I'll show you FCRZ. Okay, it's 0.009 by 0.01. Okay, the spread is not that bad. You can see the chart. It went up, made a HOD at 0.017, and then came back down. This is actually not that bad. Not as bad as I thought it was going to be. It doesn't have much volume. But see how it started off here, went up here, and now it's more than halfway down from where it was. This wouldn't be a bad place to take an entry right here at 0.01. Maybe just throw $500 into it. I mean, if you throw $500 into this thing right here, and it starts going back up, and it does go back up to its HOD, and you sell right there, you know, you can make about, what, $400 or so on this trade. Now, if it starts going down, you're going to have to bail out. You're going to have to just get out, you know, get out for 0.009 or get out for 0.008 or get out for 0.007. You know, worst case scenario, just get out, take your loss. But this isn't a bad bet to just go with. Just to throw a little bit of money into and see if this thing doesn't take back off. Now, obviously, if you really want to check, let's go check and see if it's got a reason for moving up. FCRZ. Let's go check that. FCRZ. Okay, it's a pink sheet, .pk. Don't see any news. Okay, so it's moving for no apparent reason, which can actually be good because a lot of times, you can see right here, it doesn't have virtually any chart at all. All of a sudden, it gapped up this morning, made a high, came all the way back down to 0.10, which where we just saw that. That's actually good. Why? Because what'll happen is that people will get wind of the news, insiders, you know, people's friends of friends, and they'll know news is coming out. So they'll start buying before anybody ever knows anything about news or anything. And then naturally, people who were already in it will sell, and it'll go back down, and this thing could actually become a big winner. So what we want to do now is go back and see what kind of money is being put into this. Obviously not that much. 25,000 shares. There's one at 84,000. And you can see that somebody was just buying at the high, almost at the HOD for, you know, for no reason. I mean, the only time people really do that, for the most part, is if something is pending, something's coming. So this is actually a very interesting one right here. If I wasn't recording this video, I would go ahead and buy some just to see what happens. What I mean by this is that this stock has moved up for no apparent reason. There's no news, there's no history on it, there's nothing. So this could be something. This could be news is coming out. News is pending. I mean, believe me, I make a lot of my money by this. By being able to find stocks on the scanner, see that they're moving for no reason. See this thing just upticked? Now, if you would have bought for 0.01, like I just said a minute ago, the bid is now 0.01 and the ask jumps to 0.013. A good sign. That means there's not a lot of supply over here. In other words, this thing could move up very, very easily, very, very quickly. I mean, for instance, let's say that after the market today, this thing comes out with news. I mean, well, obviously it depends on what kind of news. It could come out with all kinds of news. I mean, it could come out with just doing business with Microsoft, and this thing would be, you know, it would skyrocket. You'd make, you know, even with $500, you could make $5,000, but or even more. But you know, let's not think like that. Let's just think, hey, I mean, you know, if you bought for 0.01, you might be able to get 0.02 out of this and make it and double your money. It's not bad. You know, the chart doesn't really tell me anything. It just all I can see is that it gapped up for no apparent reason. There's no news out on it. So it's interesting. I'm actually going to be watching this stock. So this is one method about being able to see a stock, finding on your scanner, being able to see a stock that is moving for no reason, no apparent reason, I should say. And it's being bid up. In other words, when it upticks, a bidder comes in. That's a good sign. See how when it upticked, it went from 0.09 and it was 0.01 on the bid, on the ask, and then as soon as people bought, it upticked. Now what you want to see is how aggressive is SBSH in this. Can we get some sellers to sell into SBSH right now and it won't move, it won't go away? That would be a sign that it's being accumulated. Or vice versa. Let's say that people start buying at 0.013 and it doesn't move. That would be a sign it's being sold, being diluted, possibly by the company or by somebody. But the fact that it upticked like it just did, and there's a spread there now, means that there's not a lot of supply. If there was a lot of supply, you would see it would be 0.011 and 0.012. But it jumps, and then at 14, 15, and it jumps all the way to 0.02 right here on the level 2. So this thing's got potential. You could have bought $500 worth just a minute ago. Let's see, this is really hard for me since I don't have my full monitors. But let's just, okay, now look, we just got night coming in at 0.01. All right, it's just a sign of bullishness, that's all. Let's see, what's 15,000 shares times 0.01? A whopping $150. So obviously, we're not having a lot of money put into this stock right now. It's not really something that you would want to risk a lot of money into. But $500, we risked $500. And the reason why was because it went up, made a HOD, no apparent reason, came back down, sold below 50%. Here's about 50% right here. And it sold below that. So by the time I saw it, it was not a bad entry. Don't want to bet the farm on this thing, but $500, something that you could just by the end of the day maybe make $300, $400, $500. Be great, easy money. So I'm going to come back down here and refresh this. It's not refreshing itself like I was saying. What else have we got? We've got TNTU. It's 35% up, 776,000. So I'm going to keep WITM down here and just keep watching it. Oop, that's another one. Let me take it here. FCRZ. I'll watch that one now. And we'll pull up TNTU. Now, obviously, if you had multiple monitors, you could have lots of these open, and you just pull them up on different ones. That's why it's so important. Okay, so let's take a look at TNTU. No good at all. Why? Look at the spread. 0.042 by 0.05. It's got what? How much percentage is that? That's a lot. Here's the chart. The chart is, the chart reflects the spread. But let's go take a look at TNTU. Just for fun, let's go take a look at it. Oh, this is really hard for me. Operating on this teeny tiny monitor. Well, at this resolution, I mean. TNTU. This is actually a 19-inch LCD. Monday, May 15th. So it's been a long time since it's had news. And let's just take a look at the 5-day chart. Well, I mean, it's moving up, but very, very slowly. I mean, you could put a little bit of money into it, but I wouldn't. I would just, it's got way too much of a spread. Of course, the spread just tightened up there a little bit. You could watch this thing. I mean, you'd be surprised how stocks like this will get hot, They start off real small like this, and then all of a sudden they get hot later. So, I could just pull this one up and put it in here. TNTU. So now I've got 4 stocks here I'm watching. And just keep watching your scanners. Let me refresh this, see what else we got. PDVP. Okay, here's something that's got almost double its average volume. It's up 58%. Let's go take a look at it. PDVP. PDVP. Okay, what's the spread? It's 0.003 by 0.0032. It's got a little bit of a spread to it. 0.0032, 0.03. Here's the chart. It made a quick HOD of 0.004. Okay, let's go see if anything is moving this thing. PDVP. Okay, does it have any news? Thursday, February 15th. No, it does not. Magazine featured on ABC affiliate news station on February 15th. That was 6 days ago. Okay, not much of a chart. It spiked up today to 0.004. So, I mean, it's something that you could keep an eye on. Let's go take a look at where it's at now. 0.0028 is dipping down, 0.03. It just doesn't have a lot of volume. It just doesn't look very good. I mean, you could keep an eye on it, but, you know, it would have to get a lot hotter for me to want to take a trade in it. So let's take a look at our breakout scan, see if we've got anything. Not really. Not really much there. Take a look at our mover scan. These are all down, so we won't pay attention to those. Normally these things will update by themselves every minute, and they're not right now because I've got too much stuff running. And we're still watching WITM, hasn't made much of a move. FCRZ hasn't made much of a move. I'm watching ETIM and TNTU. You know, right now it's just a slow time of day. Later in the day, at the end of the day, is when a time when the stocks that have been doing well will do even better. So that's why, you know, you can take trades at the end of the day, which is still, let's see, 2 hours and 15 minutes away to the last hour of the stock market. So we've got a while to go before we'd even think about entering towards the end of the day. And you can also gap these stocks, any stocks that are hot for the day. So you find them on your scanners. Let me just refresh this, see if I see anything. Find them on your scanners. You pull them up, you watch them. Anything that's hot, anything that's got a really good reason for moving, like it's got some good news out. But you can see how you can, you know, every minute these things would be refreshing themselves. I wouldn't have to do it. And I don't think you can see the full of that one. I've got it moved over here so I can record these videos. But, you know, you can find these stocks. You've got plenty of stocks to watch and find and take a look at. And granted, you know, maybe only 1 out of 50 of them that you pull up is any good for making a trade on. But all you need is one good stock. I mean, one good one. These stocks, they move up quite a bit. I mean, you know, this stock here could move up 300-400%. It just depends, you know, what it's moving on. I've seen stocks move on nothing and go up 400%, and stocks get great news and not move up at all. There's so many different variables. If the company's using their own PRs to sell into, you know, there's so many different variables. But the number one rule is to find these stocks on your scanners, bring them up, watch them, see what's going on with them, see what the volume is, see what the action's like. Take a look at the chart, make sure you're not buying a spike. Like, for instance, let's say that you saw it here and it started spiking up and you're like, wow. And all of a sudden it kept going up and you're like, wow, well, I better get in or I'm going to miss it. And you bought it right here. Then what did it do? Went back down, right? Well, you know, this thing could keep going down. I mean, there's no telling what it's going to do. So if you did make that mistake, which you wouldn't want to do, you always want to try to buy a dip. If you did make that mistake, you should sell immediately and take your loss. Wherever it's at, wherever you can get out, take your loss. If you can remember and master that one rule in trading, you'll be successful, because guess what? You will get yourself into stocks that keep going higher, that just keep going up. Plenty of them. And you won't lose your money on the stocks that just keep going down. That's what I mean. Anybody can buy a stock. I mean, you know, we could buy 5 of them right now. But few people are good at selling. Lots of people are good at buying, but very few are good at selling. You really want to become a master, a professional at selling. That's the whole game, really, right there. You want to be able to sell on the spikes. You want to be able to sell when you're taking losses. What happens is, this happens to almost everyone, almost everybody. They always make the same mistake over and over and over again. They get themselves in. Maybe the stock goes a little higher, maybe it doesn't. Then it starts going down, and they think, "Oh darn, now I'm losing money." And then, well, I hope it goes back up again. And then it goes down lower, and they go, "Oh man, now I'm really losing money, so I don't want to sell." And then it goes lower, and then you go, "Oh, come on, go back up, please, go back up." And then it goes lower, and they get stuck. They get stuck, and they lose their money. And you know what happens? They get lucky on one, and the stock does go back up again, and then it goes even higher, and then they make a bunch of money on it. And they go, "See, all I had to do was hold it." Well, guess what? If you get into the habit of that, I promise you, even if you get 20 of them in a row that go higher and you make $5,000 on every one of them, I promise you, you will lose all of your money. You make $100,000, you will lose it. Promise you. Guaranteed. 100% guaranteed you will lose all that money. So there's only one thing to do. If you want to be a trader and you want to make money, it's so simple. Find your stocks on your scanners, watch them, take a look at them, buy dips, sell spikes. And the number one rule, if you buy at a certain price, let's say you buy right here at 0.03, and it starts going down, you better get out. If you don't get out, you will lose your money. So you need to get your entries as good as possible. That's where the skill comes in. But bottom line, I have a lot of skill, and I can get myself in and make plenty of money, but I'm successful because I know how to sell, because I'm willing to take a loss. You'd be surprised. I mean, it's like that with everything in life. People do not want to lose. They don't. They do not want to lose. They can't stand it. They can't stand losing. If they lose one time, they just fall apart. It's like, oh, I just can't take this. I mean, I don't want to. I'm going to lose $300 right now. I can't take that. Let me tell you something. If you can't take losing like that, then you are in the wrong game. You do not want to be a trader. Trust me. You've got to learn how to trade your money, to money management, to get yourself in on the right opportunities. And that's another thing. If you are scared to take a trade, you're over. You're through. You're all done. You will not be a trader. You will not be successful. You won't be able to do it. I promise you. Why? So simple. You're going to get good trading opportunities. They're going to come around, and you're going to be afraid to take the trade. And then they're going to go up. And then you're going to be like, "Oh, darn, if only I would have just gotten in right there, I'd be way up right now." And then they're going to go up further. And you're going to be like, "Oh, it's killing me. I should have gotten in. I should have. And then it's going to go higher. And you're going to go, "Oh, I can't take this. If it goes any higher, I got to jump in." And then it's going to go higher, faster. And you're going to jump in right there. Right there. That's where you're going to jump in. Or even right there. And what's it going to do? 9 times out of 10, it's going to dip back down. And what are you going to do? You're going to sit there and you're going to hold it. And you're going to lose your money. And it's going to happen to you. And the more times that happens to you, the more gun shy you're going to be about taking a trade. You're all through. You're wasting your time. That's why this takes a great deal of mental discipline and patience. Patience, waiting for the right opportunity. Let's say a trade does come. You know how many stocks I have missed because they went higher and they went higher and I didn't take the trade and they went higher. Do you think I was going to get in right there? No, it's too risky. But then they went even higher and higher and higher, and I missed it. But why? So why did I just get in? Because the trade was too risky for me. It was just too risky to take the trade. You have patience and wait for the right trade to come. And then you have discipline that if you do get in, no matter what, if it starts heading back down, you just immediately get back out. So a good way to trade then is to buy dips, buy hard breaks, get back out if the hard break doesn't work, it doesn't keep going higher, and buy dips. Because if you're buying a dip, the chances that it'll dip even more are less. But if you're buying a spike, the chances of it dipping are very good. So as a trader, you always want to buy dips and sell spikes. If you were a good trader, let's say you got in down here with $500, you saw it early in the day, as soon as it had spiked like that, you'd have just sold. I mean, you would have probably doubled your money right there. Close to it, 75, 80% of your money. You'd have just sold. Just take your profit. Move on. Thank you very much. And next stock. I mean, as a trader, no matter how good you get, you're always going to have this motto that all traders have: shoulda, woulda, coulda. It's always going to be that way. Always. Rarely will you ever make a perfect trade. Although I did make one this morning. But that rarely happens. Rarely ever do you make a perfect trade. You always are going to say, well, I should have did this, and if I would have did that, I could have made this much money. It's going to happen to you over and over and over again. You cannot let it get to you. Okay, so this is really, I'm covering the fifth video, the mental aspects and philosophy of trading. But, I'm going to be teaching everything throughout all of these videos, so, I can't help that. I gotta teach you as I just move along, as I'm going along here. But this video, basically is just about using your scanners, laying out the time and sales, watching the subtle clues on the bid and on the ask for what's going on. Is there a lot of demand over here, but it's being hidden? Is there a lot of supply over here, but it's being hidden? Is there a lot of big money getting in, or is there a lot of big money getting out? Is it moving up easily, or is it having a hard time moving up? Maybe just one market maker is holding it back, but once that market maker's gone, or for instance, there's been a lot of times where I've seen a market maker come in on the bid and just start accumulating, and then it upticks, and that market maker's still on the bid, and then it upticks again, that market maker's still on the bid, upticks again, that market maker's still on the bid, upticks again, that market maker's still on the bid, and it just keeps following up and up and up, and people are selling to the market maker, and it's just holding right there, just absorbing. I've seen market makers absorb, like on a 70, 80 cent stock, absorb 2 million shares in a day. It's a sign of major bullishness. Now, let's just say, like for instance, I'm talking about, I can't remember the name of the stock now. But this particular day, this market maker was on the bid. It was BNDM was the market maker. I remember that much. And it was following this stock up. So I got in front of it, bought, and then in the middle of the day, it disappeared. It went away. It was there the whole day and accumulating shares, and it disappeared. So guess what I did? I immediately sold. Sure enough, the stock dipped back down. Then later on, towards the end of the day, it came back again, BNDM. Now that doesn't necessarily mean it's the same person buying, but it's a good sign. So I jumped back in again. Sure enough, it took back off like another 10, 15 cents. And I made a bunch of money on it that day, on this particular stock. All because I could see that a particular market maker was accumulating at the bid. There was another stock just recently. It's on my record. It happened about 3 months ago. And it did the same thing. Actually, I think it was less than 3 months ago. It did the same thing. There was a market maker on the bid. This thing went up like 200%. And I was in it. I made like 100% on it, I think, something like that. I made a lot of money on it. And there was a market maker on it, on the bid, and it just kept following it up, uptick, it would follow up, uptick, it would follow up, uptick, it would follow up. Just kept doing that. I could see that they were accumulating. So I jumped in at 26 cents. That's, my memory's coming back to me. I jumped in. It's on my record somewhere. We can go take a look at it. I jumped in at 26 cents, I believe it was, and I sold at 52 cents, I think. So, I made a double. I made 100% on it. All because of what? Not because of my trading skills, really, but because I could see the market maker was accumulating at the bid. Something was going on. Something was up. And it did have news, by the way. And just so you know, though, it did go up from it had gone up, if my memory serves me correctly, from like 10 cents up to 26 cents from where I bought it in at, and then went even higher. But the only reason why I bought was because there was a market maker accumulating. I jumped in front of the market maker, and it kept accumulating, and I just followed it up. And then when it got to like 52 cents, I sold out, made a lot of money. And that's another thing. When you see a market maker doing that, you can play these stocks bigger. You can play them with more money. So it's because it's not as risky, because you can see there's somebody is buying for some reason. Now, you don't ever want to make a mistake and just hold on to it and say, oh, okay, well, somebody's buying for some reason, so this thing's going to go to $5, and you do it on your calculator real quick, and you're going to make $95,000. Okay? You don't ever do that. Never. Never. Ever. Ever do that. Just take your money and run. Be a trader. Because you know why? Because there's thousands of more of those stocks coming. Thousands, hundreds. I'll get another 100 this year in 2007 of those stocks. No problem at all. And make a bunch of money from them. Well, we don't hope in this market. We trade this market. So you can really use a level 2 to show you something that is being accumulated and is going to go up. Vice versa, you can really use level 2 to show you that a stock is diluted and the company is selling shares. Here's a classic example. The stock comes out with a good PR. They say that they've got this going on and that going on. It's really, really great. Blah, blah, blah. The news just came out. People are buying, buying a lot. And one market maker is sitting here on the ask, selling, and won't stop selling. That's called delusion. The company is using their own PRs to sell their own stock. What do you do in that situation? You get out. Just get out. And you can watch it, because if it breaks through that delusion and goes higher, you're going to want to jump in. But they may let it break through and then start selling a little bit higher up here, just to get people to bait people in to buy. Sometimes they do that. Got to be real careful. That's why no matter what happens, no matter what's going on, no matter what the clues are, no matter what, the number one rule that you always follow: if you buy here, you're going to get out here. You're going to take the loss. Before you even buy, you should be thinking that, okay, I'm going to buy here at 0.003. I'm going to buy $500 worth. And if this thing goes down to 0.0026 on the bid, nobody jumps in front, and it just goes down, I'm just going to sell. I'm not going to sit there and look at it and hope that, that somebody, that it turns around and bounces and goes higher. No. There is no hope in this market. If you buy and it goes higher, great. You can hold it, you can sell it for a bigger profit, or you can sell it for break even. But if it goes lower, you've got to sell it. You have to, or you will lose your money. Now, it may turn right, you might sell it right here, and it may turn right back around and go higher and just slap you, okay, and make you look stupid. But it would be far better for you to sell it here and have it slap you and make you look stupid, take a $100 loss, take a $200 loss, than to have it keep going down. And these things are notorious for that, for keep going down. They look great and everything like that, but then they go down and down and down, and you lose all your money. It's just not worth it. You've got to have money to make money. You can't lose your money and have it tied up in a stock and be able to make money. And I'm telling you right now, that is why 90% of all traders fail, because they don't know how to take a loss. It's simple as that. And nobody likes to take a loss. I hate taking losses too, of course. But you better believe that I'll take that loss. I'm good at it. I'll swallow the medicine and just take the loss and get out. And the smaller the loss I can take, because the faster I get out, the better. What I really hate is when I got to take a 20, 30% loss because I held on to it because I thought it would bounce. Well, but you'll never see me take a 50% loss because I never hold on to them that long, or a 40% loss. And the bigger I play into a stock, let's just say for whatever reason, I wanted to put $5,000 into this stock. This thing started going down. You'd see me get out super fast. So we got WITM moving here. Let's go take a look at it. WITM. Okay, you can see it's coming up on HOD here. Here's 51. Now, do you remember earlier CARR? Do you remember that? Do you remember that market maker? Well, you can go back in the video here. I'm not sure that I'm right, but I think that CARR was at 0.50 earlier, wasn't it? If my memory serves me correct, I think it was. I can't go back in this video right now because it hasn't been rendered out. This video is recording and it's going on, so I can't go back and check. But I think CARR was at 0.50. So right now in my head I'm thinking, hey, CARR is accumulating this stock. So now I really want to watch it. Something's going on. And I forgot what the news was, so I'm going to go back to Yahoo and go check. WITM. Did this thing have a reason for moving? Okay, it does. It has news out. Updates current developments on the China mining properties. Okay, remember I told you China's big? Okay, we're at HOD here. 51.5. Now we're watching if CARR will come up on the bid here to accumulate. This thing is at HOD right here. It jumps up to 0.54. So what you want to do here now, this is a bullish sign. You can see the stock, it gapped up, it's up, it's right at HOD right now. This is a very bullish sign for this stock. It's got news out, it's got a reason for moving, it's got 1 million volume, it's up 20%, it's at its HOD. We've got a market maker possibly here, CARR, that's accumulating. I would buy right now. Put it in for, let's see, 52 cents. Put it in for just 10,000 and buy at 52. Now, okay, now we've got two. Now, see, this card did come up, so I would definitely buy now, okay? Okay, so now, if you buy just at limit, it's going to go through SBSH. If you wanted to route, you would just come down here. Let's say you've got CLYP. Now CLYP is, I don't have it in here right now, but it is a market maker that you can use. So it would be in here in my normal account. You would just select CLYP and then come in here and route directly to CLYP and go get those shares. Now, why would I buy this right here? Because it's bullish. CARR is following up the bid, and it's at its HOD. It's most likely going to break its HOD right now. It's worth the risk to go ahead and buy this stock, get yourself in, because it's got news, it's got a reason for going higher. It's bullish. You've got market makers coming in on the bid here, and it's ready to break its HOD. Now, if this thing doesn't break its HOD and you're in at 52, okay, then then what you do is you just immediately get back out. Now you can see there's 3 market makers on the bid. Now this thing really looks good. Let's say you weren't in yet. You really want to route now to CLYP. Go down here to CLYP, select it, and then hit the buy button and route and get those shares. I would try to stay away from Knight. If there's another one that you can use that's there, that Knight is not there, I would just go ahead and route through another one besides Knight. If Knight is the only market maker there, then obviously you're going to need a route through Knight. But the problem is that there's probably people trying to buy right now, and they're waiting, and it's pending, and they're all going through Knight. So the chances of you getting shares through Knight is not that good. I mean, not necessarily. Sometimes I get filled pretty quick. But, you know, if there's another market maker there, go through the other market maker, as long as it's a free market maker to go through. So we've got a stock here. The current time is 1:08 Eastern Standard Time. The stock looks pretty good. It's a slow time of day, yet it's getting ready to break its hot, or it's trying to. There's you know, some good buys going through. Nothing real big, but it looks pretty good. We've got a market maker here that looks like it's accumulating. What I'd like to do now is watch it even more to see that if this thing upticks, CARR will uptick with it. Now, one of the things that you'll find interesting is that a lot of times when you get a market maker that is accumulating, it'll be some off market maker. Like, do you see VNDM in here anywhere? Let's go take a look. VNDM. Here it is. Okay, now is that an off market maker or what? It's at 1.01. Okay. Do you see? I pull over here another level 2. Do you see CARR anywhere in this level 2? Let's take a look. I don't see it. Right? Why? Because CARR is a super off market maker. Okay? I don't know who it is, but it's not a market maker that people would use very often. You will find often that a market maker that's going to come in and accumulate. I don't know why this is, but you'll find this often. Not whenever, but a lot of times. I'd say about 70% of the time, whenever you see a market maker come in and accumulate, it won't be a normal one. It won't be SBSCH or Knight or UBSS or HDSN. It'll be some off market maker like VNDM, like CARR. I forget, on that stock I was talking about from 26 to 52, I forget which market maker it was that was accumulating. If my memory serves me right, I think it was VFIN. I could be wrong. You know, I trade every day, and I trade through all these market makers. It's hard for me to remember everything, but if memory serves me correctly, VFIN rings a bell, that was the market maker that was accumulating. So that's another thing for you to pay attention to. So we've only got, let's see, make sure I'm at the top here. We've only got one market maker left here, CLYP at 52. And remember, you could have routed to CLYP. Still got 3 market makers at 51. Let me move this back over here so I can see everything. Okay, so, you know, like I said, it's a slow time of day right now. So this thing not breaking hot right now doesn't... breaking hot faster, what I mean, doesn't make me worried at all. The chart looks good. It gapped up. It's held its gap. It made a HOD. It dipped back down, not too far. It's gone back up, and now it's getting ready to break that HOD right here. Assuming it does, it's bullish. Now we see we've got another market maker right above HOD at 0.529, and then one at 0.54. So whoever this is that's wanting to sell is just trying to get out. Well, trying to get out more than a penny. 1.1 pennies below the this resistance here. So I'm just sitting here watching this stock. It looks bullish to me. I really want to see if CARR will come in at 52 once this thing upticks. Because, I mean, let's say that, the CARR, whoever this is that's buying, what they're trying to do is they're trying to buy covertly. They're trying to just accumulate. And because otherwise they would just buy at the ask. So another thing that you want to watch out for is for big money. Now, I don't see any big money in this stock right now. Nothing big. So, but what they're not going to show you is the big money may be here. And only time is going to tell what's actually happening or what clues are happening. But right now I'm already getting a clue that this CARR is trying to accumulate. So now what I would watch for is when somebody sells, and you can see that nobody's selling right now. When somebody sells, how many shares do they accumulate? That's what I would want to see. So we've covered so far in this video using your scanners to find stocks with. We found this WITM. Watching the subtle clues on the bid and the ask to see what's going on, to see if there's a market maker accumulating, to see if there's a market maker diluting or selling too many shares. We're covering watching big money to see if there's any big money coming in. Like big money for a 52-cent stock would be like 50K block. Somebody buys 50,000 shares. That would be $50,000 worth. Or 100,000 shares. That would be $100,000 worth. Or 25,000 shares. That would be 25. Now, don't let that fool you, though. I mean, sometimes people do come in and buy 100,000 shares or 200,000 shares of a stock like this, and it'll go back down. So don't just go just by that. All it is just one piece of the puzzle. That's all it is. It's just one little clue that you can use to put all the other clues together with to see what you come up with. So don't let that fool you. Don't think, oh, well, somebody just bought 250,000 shares, so if they're willing to risk $250,000, I'm willing to risk $3,000. And if it starts going back down, well, what's the guy that just bought 250,000 shares doing? Who cares about what they're doing? I mean, it could be some fund that's buying at 52 cents, going to hold the stock for the next 3 years. You don't want to follow them. You just want to use it as a clue. That's it, just a clue. Because if if it's bullish and there's people buying, and if there's a market maker accumulating, and this thing is moving up and breaking its high, and this thing has news about doing business in China, all of those pieces of the puzzle together equals something that equals bullish. But still, no matter what, I don't care how bullish it looks, I don't care what kind of news it has, I don't care who just bought $1 million worth, I don't care what market maker is on the bid. If you buy here and it starts going back down, sell. You can always buy lower. You can always buy another hot break. Never, ever hold a stock that you're in a losing position on. Period. I kid you not. I cannot stress that enough. If you can master that, you can make a fortune trading stocks. But you have to be able to master that. Period. If you can't, you will fail. I promise you. I promise you, you will fail. It may take a week. It may take a month. It may take 6 months. But you will fail. Guaranteed. But if you can master that, you will succeed. Okay, so we're watching for big money here. We're watching for the market maker car if it's accumulating. We're watching to see if it's going to break hot here still. Another thing that you do is you can watch your news streamer. Now this most all brokers have a news streamer. And this one does too. I can show it to you later. I really don't want to show it to you right now because there's not much to it, and you really don't need to watch a news streamer, okay? Why? Because, you know why? Because you're going to be sitting there watching it all day long, reading about all kinds of boring news that has nothing to do with, what stocks are trading. I mean, it's just not an efficient way to find stocks. The efficient way to find stocks is with your scanners. Your scanners are going to find you stocks all day long, especially if these things would automatically update themselves. Here's another one that's got a potential. Look, it's got 3.6 million volume, 190,000 average volume, up 45%. WWEN. Let me come over here and bring it up. WWEN. I've got the chart down here. This thing has got a nice little chart. You can't see it. Let me pull it up over here. Oh, just don't have enough room in this one monitor to show you all this stuff, but it's got a nice up-moving chart. Let's go take a look at the news. Okay. WWEN. Normally I could do this really super fast, but I'm just having trouble here on a small monitor. Okay, what do we got here? Has this thing got any news? Monday, today is Tuesday, so this happened yesterday. W2, which the market was closed yesterday. W2 Energy Incorporated begins demonstrations of GAT reactor. Has something to do with energy. Looks like possibly nuclear. I don't know. But who cares? Let's just take a look at the chart. Okay, this thing gapped up. It's gone straight up. That's pretty darn bullish. Let's go take a look at the level 2 level. It's 52 week. It doesn't show. It's only got a 5-day chart. Yahoo's been doing this lately, but that's okay. We don't need to know. Let's go watch what's being put into this thing, and that'll tell us. I need to move these over to another monitor for a minute. Let's see here. TNTU. Let's take a look at, let me just link these real quick. WEN, let's take a look at the time in sales. I think you can see all of that now. Okay, somebody just bought 15,000 shares at 52. It didn't move CLYP, so we are watching that. We want to make sure that this market maker is not a diluter. And we're just watching it, keeping an eye on it. This one here, it's got a nice chart. Let me pull it over. Let me pull this over here and put the chart over here so you can see it a little bit better. Make the chart smaller so you can see it. And you can see this thing has just mildly moved up. It's up 45%. It does have a spread. It does have some news. This is something I would just want to watch. Just keep an eye on. This might be a good stock to gap or something. So far, I like this one the best. WITM. Still waiting for it. It's a slow time of day, so we're just, just watching. These things are moving pretty slow right now. FCRZ, we can see it hasn't done much. WWEN just got a buy, 2400 at 0.065, which is like almost nothing. So it doesn't have a lot of money being put into it, that's for sure. But it's got a chart. The chart looks pretty good. Its HOD is 0.065, and it is at 0.065. It's just something I want to watch right now. Nothing more. This one I'm still watching. Now there's been a 15,000 share buy and a 2,400 share buy, and CLYP still has not moved. Now, it doesn't necessarily mean anything right now. Somebody could have, 20, 30, 40,000 shares of this stock, and they're just trying to sell. Or this could be a diluter. The only way to know is to keep watching. But let's just say that, we see 10 more buys go through that equal, 150,000 shares, and this thing still doesn't move. Then I would definitely be getting worried that this market maker is a diluter. But if I could have confirmed earlier that this market maker is an accumulator, then I wouldn't be as worried as much. But I can't tell yet for sure if this market maker is an accumulator, or even get a really good clue, because I haven't seen anybody sell. Look at all these buys. Nobody has sold. This was a good sign, even though there was only one trade that went through, that somebody was buying higher that you probably couldn't see. It was in between the bid and the ask, and somebody was bidding higher. So it's probably a buy, not a sell. Probably. Not necessarily, but, it's a good sign. Whenever a stock is moving up like this and you see a trade going in between the bid and the ask, that's usually a good sign. Vice versa, whenever a stock is going down and you see a trade in between the bid and the ask, it's usually a bad sign. That's people trying to get out lower than the ask. Whereas if you see the trade, if the stock is moving up and you see a trade in the middle between the bid and the ask, that's usually somebody trying to buy higher than the bid. I hope you understand that. There are so many things that you can know without knowing, or have a good educated guess without knowing. Kind of like algebra. You can figure out with a certain amount of information, you can figure out the problem, the solution. You can figure out the height of something, for instance. Well, it's kind of the same way with the level 2. With a certain amount of information, you can extrapolate and know or have a good idea of what's going on. It takes some experience. You can't just do it your first day out and expect to be able to do it. But I'm trying to help you with these videos to give you some ideas on what to look for. Okay, we just got an uptick here. Not an uptick, excuse me. We just got a market maker uptick. They went from 51 to 51.5. And if you go back in these videos, you're going to notice earlier that this happened before, too. SBSH was the first one to uptick, and then CAR followed. So let's see if that happens again. Will CAR follow SBSH now and uptick a level? Or will they stay down here? And if this thing goes higher, will it come up to 52? That's what we're watching for. We're just watching to see what's happening. Let these guys here tell you what's happening without telling you. Let them speak with their money. Let money talk to you. Forget about what somebody's saying on some message board or anything like that. We're going to watch their actions, not their words. And right now, their actions are, hey, I want some share. I want to buy. I'm upticking here. And one of the reasons is because nobody's selling. Now that's another bullish sign. Nobody is selling. That's pretty bullish. It's not every day that they may start selling any second, but so far it's a good sign that this thing is up 20%. It's at its HOD, and nobody is selling to the bid, is what I mean. Obviously, people are selling here, kind of selling covertly almost. But they're not in a hurry to sell. If they were in a hurry to sell, they'd be selling here. Take 51.5, a half a penny from the HOD. Not a bad place to sell, really. But nobody's selling. That's called being bullish. Now, while I'm watching this video, I'd like to just show you a little bit about some charts. I wanted to show you how to play the chart to play LODs, HODs, double tops, double bottoms. Now, LODs are low of day. HODs are high of day. These are very important parts of the chart. LODs, low of day, is a good place to buy because it'll have support there and want to bounce off its LOD and go higher. And you maybe get a nice little bounce out of it and sell it for a little bit higher. HODs are a good place to naturally sell if you're already in it, or naturally buy if it goes higher. So HODs are very important. You want to sell if you're already in. Most of the time you won't be, though. You'll catch it on your scanner, and you'll catch it, and it'll already made a HOD. It'll be down here somewhere, and then it'll move higher. And then I always buy HOD breaks. If there's a reason for it to go higher, if it's got news, I will buy HOD breaks. But I will sell them immediately if they start going back down. Very important to know that and to do that. So you've got HODs, you've got LODs, you want to play those. The LODs act as support, the HODs act as resistance. You want to buy LODs to hopefully go higher. Now, if it goes lower than LOD, you better get out quick. If it goes higher than HOD, you want to get in, but if it starts going lower, you want to get back out. But you always got to play those because those are very important points on a chart to play. Another thing that is less important, but you can still, it's just a piece of the puzzle, okay? A chart is not the end-all, be-all of trading. It's just one piece of the puzzle. That's it, like I was explaining earlier. you've got double tops. Like for instance, here's a top, right? It's hot. And then it dipped down. And here's a top right now. If this thing dips back down, that's a double top. It's got two tops right here, and it's gone back down. If it goes higher, then it has a breakout. It broke out and went higher. Vice versa. A double bottom is when a stock goes down, makes a bottom, comes back up, goes back down again, it makes another bottom, and goes back up. That's a double bottom. That's a bullish sign. A double top is a bearish sign that it couldn't break through. Now, I would call a double bottom more bullish than I would call a double top more bearish. Why? Because a lot of times these things will go up and make a double top, come back down, and then the third try, it'll go higher. Now, if it made a triple top, that would be very bearish. But a double top is not necessarily real bearish, but you can't bank on that. You don't want to just hold it and say, oh, well, the third time it'll go through. No, no, no. You've got to play these things. Play the opportunity, get in. If it doesn't move higher, get out. Now, when I first started trading, one of my very favorite plays was bounce plays. One of the reasons why is because they're so profitable. They're also by far the most scary trade that you'll ever take is a bounce play. I would really love to show you a bounce play. I don't have my bounce scanner running, but you would have the same thing running. You just have a bounce scan, and you can also play bounces off your high and lows. I'll show you that. Just click on the fifth icon from the far right up top under your DAS Trader software, and it's called the Tops List. And you can see that you can find stocks that are, like for instance, their percentage loss. I really don't even use this anymore. I used to use it a lot, but you still can use it, but you know, it takes up too much of my time. Okay, and really, it's much easier just to use your scanners. Okay, find the stocks, because you can find these stocks and you can find them pretty early just by watching. And even if you miss one, let's say, you can always gap it at the end of the day. And gapping is a great way to make money. I mean, it's fantastic. I gapped ETIM and made, 23%, something like that. I mean, you know, it just, gapping works really super good. And you can easily gap, which I'm going to cover, by finding stocks at the end of the day with your scanners. And just looking at them, checking the news, checking why they're moving, seeing how strong they close. The stronger they close, the more you're going to want to gap them. The bigger the volume, the stronger they close. Stuff like that. So we've covered some hot breaks here. We've covered double tops, double bottoms, and you know, of course you always want to buy dips. I mean, like for instance, when you saw this coming up and you saw it dipping down, and it dipped down, you know, right about halfway, that was your cue to start taking a position again. And let's say that you didn't get it right here, so you got it up here or up here. Well, guess what? I mean, if you would have bought it 50 cents and you saw it look bullish, you'd be ahead right now. $0.015, which is not bad. And this thing has a chance to move higher. There's a 5,000 share trade. Now, we still have CLYP on the ask. Okay, now we just got SBSH come in front of CLYP. Okay, so, you know, it doesn't necessarily mean anything, but what we're getting here is some resistance. And CLYP is now at 53 instead of 52. Okay, that's because CLYP just disappeared, and now we have the next market maker at 0.529. Okay, that's bullish. That looks very, very good. Why? Well, for one thing, CLYP is obviously not diluting. They were taken out with, just not that much. 15, 24, 2,000, 8,000, and 5,000. CLYP is taken out. There is no other market maker right now coming in on the ask. Now somebody just bought 5,000 at 0.529. Okay. This is definitely looking bullish to me. I need to pause the video. I need to do something really quick here, actually, to make a trade. A real trade, and I will be right back. Okay, I am back. So, what we can see here is DOMS is now on the ask, or the bid, and CARR did not follow the bid up yet. It doesn't necessarily mean they're not accumulating, but I certainly would have liked to have seen them follow the bid up. Definitely would have liked to have seen that. I'm just having a really hard time here with these. I got so much stuff I'm trying to do, and I got working on this small monitor and trying to show you everything is definitely a challenge. So anyway, just wanted to refresh this, see if we've got anything on our mover scan. Constantly always checking this. You always want to check this because you never know when there's something else out there that's actually really moving, that's really big. That's got Microsoft news or, whatever. Let's see here. TRNP up 90%, 4.6 million. Let's just go take a look at it. This stock doesn't look too good, WWEN. Let's go look at TRNP. Okay. 53, 55. I need to get a time in sales on this thing. I've got to move this over. TRNP, we'll put it right here so we can see it. I see some action here. What's going on? Its HA is 0.59. It's got a little bit of a spread there. We've got a little bit of sales into 5.2. See what DOMS is doing over on this one. So I'm just watching. Here's TNRP. Here's the chart. Remember, you got to always look at the chart. Chart's going to tell you what's been going on. This thing started off, went up. Doesn't have a lot of volume. I mean, 4 million, 0.7 volume on a 0.055 is not that much, especially since it was way down here at 0.03. Starting the day off, it's up 76%. This is really super hard for me, but let's go take a look. TRNP, basically just showing you the mechanics of what you need to do. Normally I have 4 monitors here, and I can just look up this stuff on each different monitor, and everything always has a different place that I always look things up on. Nexus Nanoelectronics product sales backlog of 1.7 million in February. Okay, so it's got some bullish news. 52-week range is 0.007. It's that's obviously wrong. Okay, it's got a nice bullish chart today. This thing could be a gapper. The news is out yesterday, but the market was closed, so I didn't have a chance to trade. So it's just one possible one, but I would like it to be a lot more active, and I would like it to have a tighter spread. So it's not that good, but it could get better. And just because it doesn't look good right now doesn't mean it won't look great at the end of the day. So I'd like to continue to show you the stock for a little bit, but instead of just letting it record, I'm going to pause the video for a little bit, and we'll see what happens over the next, I'll just watch it for a bit. If something happens, I will record the video again. Otherwise, I'm going to conclude this video later. Just want to see if this thing starts to pick up, because I'd like to show you what's happening, so I can explain it to you and teach you. This is a good one to watch, because this one has a good chance of going higher today. bring this over here, pull up the chart. You can see that it has made a new HOD, 0.529. The spread is not bad at all. It's less than a penny right now. We've got some market makers that have lined up here and here, one here. I mean, these people are waiting. They're not in too big of a hurry because this thing's not moving up very fast. But if it was, these guys would probably start to chase it. Maybe even pull their bids and just buy at the ass, perhaps. Then you'd really see what market maker there was accumulating, if there was one. It's just a slow time of day right now. As a matter of fact, I'm going to teach you a very important rule about trading right now. At, let's see, 2 o'clock Eastern Standard Time, from 2 to 3 o'clock Eastern Standard Time is what I call the dipping hour. In other words, stocks will have a tendency to dip during that hour. Even if they were strong the previous time in the day, they still will have a very strong tendency to dip between 2 and 3 o'clock Eastern Standard Time. And usually, like clockwork, they'll dip at 2:30 p.m. Eastern Standard Time. That'll be right at the time. And a good time to buy will be on that dip at approximately 2:45 p.m. Eastern Standard Time. You've got a window in there. It just depends on where it dips and how much it dips and what it's moving on. Is it moving on news? How much it's gone up during the day? There's a lot of different variables to have to account for, but just as a general rule, stocks will dip during that hour. They'll usually hit their peak dip at approximately 11:30, or at 11:30 my time, the Pacific Standard Time, but 2:30 Eastern Standard Time. And you want to look for this, because if it's a good stock and it's got reason to go up and it looks really good, you want to buy during that time. Vice versa, if you're holding on to it, there's a good chance that it's going to dip during that hour. So you may want to sell out, take your profit, and then buy the dip during that hour. I mean, I make a lot of money doing that. It happens at least 80% of the time. Stocks that don't dip during that hour are very strong. Very strong stocks. Now, some stocks, I mean, that rule is not written in stone. Again, all it is a piece of the puzzle. For instance, what was that stock that just recently we were trading? SSSH or something like that. I can't remember the symbol now, but this thing, its pattern every day would be to go up during the dipping hour and then go back down during the end of day hour. Just the exact opposite of what a stock will normally do, but it would do the exact opposite. What was so funny about it is it would do that every day, the same pattern over and over and over again. So always go with the pattern. I mean, when you realize a stock is doing that, take advantage of the pattern. Don't hold it for the end of the day and buy it for the dipping hour. But as a general rule, most stocks will dip during the dipping hour. So you really want to use that to your advantage. What happens, I think, is that it just gets so slow during that hour that people get impatient, and they say, well, man, I'm up a lot here and this thing just isn't moving. I'm starting to get scared. So they start to sell, and then other people see that, and the people are selling, and they go, oh boy, this thing is going to go down. I better get out. And then it just creates a dip. Now we are 12 minutes away from the dipping hour. So if I was holding this thing, I'd probably get out right here. Like Hill just came in to come sell. I'd probably come sell too, because it just broke its HOD 12 minutes, actually did a little while ago, but it's now 12 minutes away, and it's at HOD, and it's not going higher. So chances are this stock will probably dip. You might be able to pick it up for, and now 2 market makers are coming in. And now there's only one market maker here on the bid. Now we're starting to get some selling. So 12 minutes away, we are getting some selling now, right prior to the dipping hour, which is a little early. But, it happens, right around that window. So you could sell out here. Just take your profit, sell out, and look to buy back, 50, 48 maybe. Just depends. And then stocks will have a tendency at the end of the hour, but lately in the market here in 2007, in February of 2007, this whole year, and even prior, like in December, stocks are having a tendency to move the last half an hour. So you can see with ETIM, we're getting some buys here. They look big, but they're not that big when you consider. But I would like to just pull up ETIM just to see what's going on. Now, when you see stuff like that, okay, we see ETIM, we see it pulled up. Do I have a chart? I got a chart right there. It had sold off. It's still red. But what we want to go take a look at now is, does it have any new news? Did it just come out with some new news just a few minutes ago? That's why maybe it's moving. So we want to go look at it. ETIM, nope, doesn't have any new news. So nothing new is going on, but it's worth taking a look at, because if there was, we could jump in and be in early here. And it happens a lot. Okay, you see a stock starting to move that you've already been watching, and you want to go check to see if there's a reason. What if we just looked up right here and it just said, something really juicy? I mean, who knows? It could be all different kinds of things. It depends. I mean, this is probably not this stock. It's about funerals. But, it could be something else where they're doing business with Microsoft, or Google's looking to buy them out. What if this was some little tech company and it said Google, taking a look at the ABC stock for buyout? Would you want to buy? I mean, this stock would explode. Any stock would explode if they had that kind of news. Wouldn't it be worth it to go check the news real quick just to make sure? So you always do that. Just get in the habit of that. Just have it up on your monitor already. Bring up the news. Go check it. See what's going on. Because if, let's just say that you did see that, and that only happens, one out of every 200 stocks you're going to check, 300 stocks you're going to check, 500 stocks you're going to check. But that one time it does happen, this thing can explode. Now, I wasn't watching here, and you can see almost as if we were getting baited, and this stock is now moving higher. So one of the things that you have to consider is this stock could really run. Why? Because of the China news. Like I told you earlier, stocks really like to run on stuff like that. Anything that's really juicy, like, China news, that could be like a huge profit to do business over in China. Something with Google, something with Microsoft, stuff like that. Stocks can really, really, really run. So, what you could do, there's a good strategy. Let's say that, you got in down here. You could always sell flat. Worst case scenario, just get out flat, not lose any money. You always got to play it mathematically. Don't play it emotionally. I mean, if you, like, for instance, let's say you go, oh, but I could have sold here and I would have made $100, but now I've got to sell here and take the commission loss. I just don't want to do that. Why, I should have done this. I shoulda. And if I woulda, then I coulda. You're going to constantly beat yourself up every single day if you do that. So you can't do that. You just say, oh, hey, look, I got in here at 50, or I got in here at 52. If this thing starts, if it breaks the 50, if it starts to look like it's going to break to 51, I'll just sell for a 1 penny loss. I'll buy back lower, or if it starts going higher, if I got to buy here at 0.54, then I'll buy there at 0.54. You've got to just play it. Because look, I mean, you buy here at 0.54, you could be selling at 0.84 the next day, or later that day. I mean, these things can really run. So just whatever you do, cut your losses short, get yourself into positions that's possible to make money, and you will do really super well in this market. Where's my chart? Oh, there it is. I'm sorry, but this is just such a small monitor. You can see the chart. It looks beautiful. and it's starting to break. Whether it actually does break now is another question. We are 7 minutes away from the dipping hour. And like I said, 80% of the time stocks will dip. But if they don't, it's a really strong stock. So, you know, I mean, if we had a crystal ball, we could just look at the crystal ball and see what this thing's going to do. But we don't know what it's going to do. So you just have to play it the best you can. Cut your losses short. If you start taking a loss, get yourself in. Now, I saw this thing earlier, and it looked bullish. That's why I'm still watching it. And, you know, to me, it looks pretty good. It's got a good chance of going higher here. CAR is not following up the bid, the ask, like I would hoped it would, but it still may. It just may be taking a breather right now. And it may get active later in the day, and it may get really aggressive. It usually market makers that'll accumulate will accumulate early in the mornings for the first 2-3 hours, and then take a breather, and then come back later at the day, like the last hour, and accumulate all the way into the close. So you gotta just play it by ear. Watch how things go. I mean, this isn't an exact science. You're just taking all the pieces of the puzzle and putting them together to see how bullish it looks, or to see how bearish it looks. What kind of a chance does it look like it's going to go up? If the chance looks better than it looks like it's going to go down, jump in. If it starts going back down, jump back out. If it starts going up, when do you sell? Well, the good time to sell is when it starts to go up, and then it goes up faster, and then boom, it just makes a nice spike. That's when you want to sell. Right when it goes up its fastest, when it just boom, 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 jumps and just goes up. That's when you want to sell. Now, sometimes, you're going to get into a stock where you're going to do that. You're going to sell it. And guess what? This thing is going to take off and go even higher. And you say, well, why did you sell? Well, you sell because 9 times out of 10, it's going to come back down. That's why you sell. I mean, just because it just takes off and goes even higher doesn't mean that, that you made a mistake. I mean, you never beat yourself up like that. I shoulda. Now, if I woulda, I woulda, coulda. I mean, it's crazy. You can't live like that. Just take your profits, sell the spikes. Look, I mean, if you sell the spike and this thing turns around and starts going even higher, you can just jump right back in again. All right? I mean, but I never said trading was super easy. You have to be disciplined. If you do jump in and it starts going back down, you got to get back out. You got to take your loss. But you'd be surprised. A lot of times you do jump in and you sell the spike and it starts going higher. You jump back in again. This thing will spike up even higher and go even higher, and you'll make another 20% trade. I mean, it happens a lot. It's just that you don't want to lose the 20% by holding it going back down. The trick is to make more percentage than you lose, right? Simple as that. So get yourself in possibilities and cut your losses short. It's really not that hard. It's not as hard as it seems. Everybody makes the one crucial mistake that you cannot make. They buy a stock, it starts going down, and they hold it. And it goes down further and further and further. And they're stuck. And they go, well, when is it ever going to go back up to 53 cents again? Well, maybe never. Maybe that was its high for the next year. I mean, you're just going to hold it for the next year? Well, I put $3,000 into it. Well, now I'm down $1,500. I don't want to sell it for $1,500 loss. Oh, well, okay, then why don't you just, sell it when it gets to like a $2,500 loss then? Would that be better? People hate losing. And what about if they had sold it for a $200 loss with their $3,000 instead of a $1,500 loss? Then they'd only be down $200. They'd have $2,800 left. With that $2,800, they could use these scanners, okay, find themselves another stock. Maybe it takes a day, maybe it takes 2 days, maybe it takes 3 days, maybe it takes a week, and get themselves in on a winner that doubles in price, and they could take their $2,800 and double it to $5,400. I mean, it happens all the time. $5,600 happens all the time. So if you're stuck in the trade and the stock is going down, and now you're $1,500 down, and you don't want to sell, then how are you going to get into that next trade that's going to go up 100% or 20% or 50% or 10%? How are you going to make money with your money if you're stuck in a trade? You can't, right? So never get stuck in a trade. Simple. It's so easy. But I kid you not. I tell people that over and over and over and over and over again. And they still do it. They still do it. Oh, well, I couldn't sell. I tried to sell here for 1 penny loss, and it just wouldn't go through. I couldn't sell. Oh, okay. Look at CAR just upticked. Bingo. There's your accumulator. The stock's really looking bullish. If I had sold before, I'd buy right now. The stock, even though we are 1 minute away from dipping hour, this guy's trying to accumulate. So, okay, so you missed your 1 penny loss. Okay, then sell for a 2 penny loss. Oh, you missed that one? Okay, then sell for a 3 penny loss. Oh, you missed that one? Okay, sell for a 4 penny loss. I don't care. Sell it and get out and take your loss. Simple as that. If you can't learn to do that, if you can't mentally do that, then don't trade, because you're in the wrong business and you're going to lose money. I kid you not, though. I have tried to explain that to people more times than I can count, and they say, yes, I understand. Yes, I will do that. I will do that. I know what you're saying. I will do that. And what do? First thing they do, they go ahead and they do it. They do it right after I just told them that. Right after they just said that they won't do it. And then I tell them, don't ever do that again. And what do? They do it again. I mean, it just amazes me. It really does. Let me tell you something. I know I keep hammering this home, and I'm going to keep hammering home throughout all these videos. If you cannot learn that, you will fail. Period. A few years ago, I was in my trading room, and I had some newbies are in there. Newbies are always the ones that talk a lot. Well, not always, but... And there was a stock, IBZT, and... it had gone up a lot. It was like at 0.04, 0.05, or maybe, I forget exactly, but let's just say 0.05, 0.04. And it's moving up, and it's moving up pretty good. And I'd already missed good entry, so I wasn't going to take the trade. And then it moved up to 0.05. This thing is uptaking, very bullish. And it moved up to 0.06, and then it started moving faster. And I told people, this is really risky here. That, I want to buy a dip. So I was missing it, right? I miss lots of trades. It happens all the time. And then it starts going 0.06, and it starts going even faster, 0.07, and then it really goes fast, and it spikes up to 0.8, and I tell people right down in the room, I say, whatever you do, don't buy right now. What do you think they did? They bought. Right after I told them not to. Guess where the high of day was? Right where they bought. They bought the HOD perfectly. They couldn't even done better if they had tried. They bought the absolute high 100% perfectly. I mean, a professional trader couldn't have done it that good. No way. No chance. Then it started going back down. I told them, sell immediately. Do you think that they sold? No. 2 traders bought at the HOD perfectly, and they were so excited too. I'm in at 0.079. The other guy goes, I'm in at 0.08. Woohoo! We're gonna make a fortune. This baby's going up so fast. What did it do? It went down to 0.07, and then 0.06, and then 0.05. Let's go see where IBZT is now. It actually doesn't even exist anymore. It's trading under a different symbol, I believe. It went down to nothing. I mean, it went down to from 8 cents to below a penny again, to 0.0022 or something. They lost all the money that they bought that stock with, and I don't know how much money they bought it with. I didn't ask them, but they probably, I'm just taking a guess. They put a couple $1,000s into it. They lost all that money. That money's gone. And I'll tell you something else. Another funny story. Okay, that wasn't a funny story, but I'm trying to explain to you, I'm trying to hammer this home so you can understand and learn from other people's mistakes. There was another guy. I taught him to gap stocks. And we actually gapped IBZT. It's in my record. I gapped it at like 0.029 or something like that. You can go take a look at my record. I gapped it at 0.029 and sold it like 0.035 or something like that. Made a nice little profit on it, right? Well, actually, no. That was another time. This is when IBZ first ran, and it was like I think it was under a penny, like 0.00, 0.001 or something like that. I forget, but I think it was under a penny. And this guy gapped it with me, and it was his first gapper ever. And he put because I start every year with $2,500, so he put $2,500 into this gapper, and sure enough, this thing gapped up like 40%. He had a bunch of money into it. I sold out, took my 40% profit. Was like, thank you very much. Well, guess what? This stock went even higher, and this stock went all the way up to, like in about maybe a month or so. I'm just taking a rough guess. Maybe it was 2 months. This stock went all the way up to 0.08, like I just was explaining, right? Well, he had held it the whole entire time. He had like $45,000 or something like that in profit. And he just held it all the way up to $45,000 profit. Well, guess what? He also held it from a $45,000 profit all the way down to nothing. And IBZT doesn't even exist anymore. Don't do stuff like that. Take your profits. Here's another story. My uncle, he bought Qualcomm at like $15 a share and put like $15,000 into it, something like that. And what did Qualcomm do? It went up to $1,000 a share after it split 8 times. He had over $1 million in profit. Every day he's in the office screaming, "Woohoo! Go Qualcomm!" I mean, he's making a fortune, right? What did he do? Do you think he sold it at $1,000 a share? No. When he rolled it all the way up to $1,000 a share and it went back to $900 a share, do you think he sold it? No. Do you think he sold it at $800 a share? No. How about $700? No. How about $500 a share? Surely he sold it for $500 a share, right? No. Where did he write it down to? All the way back down to $32 a share. Where's Qualcomm at now? I think it went up some. It's at 42. So he wrote it from 1,000 down to 32, and now it's at 42. It's got a little ways to go back to 1,000, don't you think? Don't do stuff like that. Take your profits. Whenever a stock really makes a big move higher, just take your profit. If it goes higher, great. Good for that stock. If you're trading, you can always get yourself back in again. Sell the spikes, buy the dips. Sell the spikes, buy the dips. Just keep doing that. If you buy the dip and it goes lower, sell out. Buy a bigger dip. If it breaks its high, you could get back in again. Stuff like that. Use those points to get yourself in, get yourself out. But don't just sit there. What happens is people get stuck like a deer in headlights, and they don't know what to do anymore. Like, for instance, when Qualcomm was at $1,000 a share, my uncle thought it was going to go to $2,000 a share, and he was going to make $2 million. And I kept telling him, why don't you sell? You know what his excuse was? His excuse was, well, if I sell, I haven't held it for a year yet. Do you know what the taxes I'm going to have to pay on that? Can you imagine that? I mean, he was afraid of taxes. Oh, well, yes, you're right. I mean, hey, if you've got to pay those big taxes on that stock, then, what? I mean, you're gonna make $1 million, so you're gonna have to pay like what? 40%? So you're only going to make $600,000 on a $15,000 investment? Yeah, you're right. That's too steep for me. You just go ahead and hold that stock. You know what you do? You say, look, this has been a wonderful run, but I'm going to set a stop at $900 a share. I really hope it doesn't go down to $900 a share. I really do. I hope it keeps going higher, but if it does go down to $900 a share, that's it. I'm selling. I'm just going to take my profit. Thank you very much. It's been a great run. Is there any other stocks out there worth investing in? You understand? He never, because what happened first he convinced himself he didn't want to sell because of the taxes. Then when it was down to $900 a share and he was losing that money, he was thinking, well, this thing's going to turn back around, and plus I don't want to sell because of the taxes. And then it went to $800 a share. Well, this thing's going to turn back around, plus I don't want to sell because of the taxes. Then it went down to $700 a share. Now he wouldn't have to suffer the taxes, let's say, right? But it's at $700 a share. Now he's only got like what? $700,000 in profit instead of $1 million. Oh, well. I mean, I want my $1 million back. I don't want to sell for $700,000 profit. No. Come on. Now it goes down to $600 a share. Oh, man. Now I've only got $600,000. I mean, come on. Come on. I want this thing to, now it's only $500,000 profit. Now it's only $400,000. Well, you just think to yourself, why did he just sell? Why not just take the $400,000? Because mentally you can't deal with it. It's just a phenomenon of trading. So you've got to learn how to be to be agile. To get yourself in and not be afraid, and get yourself right back out and not be afraid. Trade. I mean, you could trade for $8 a trade. What's the problem? I mean, you could get in for $8, you get out for $8. You get in for $8, you get out for $8. Why not just lock in profits? See what happens. Maybe it goes down and it makes a nice dip, and you can buy again and make it more profits. Just whatever you do, don't get caught up into that. I mean, the guy who bought IBZT at .001 or whatever it was and wrote it up to 8 cents, he thought it was going to $5. He thought he was going to turn his 2,500 into, 500 grand as, ship had finally come in. Hey, it didn't happen, did it? Just trade and make money. Be agile. Be a trader. Get yourself in on opportunities. Get yourself back out if you're taking a loss. Take it the smallest loss you possibly can. Get yourself right back in again if it looks like it's turning and it's going to go back up again. Buy dips. Sell spikes. Use your scanners. Find good opportunities. This scanner will find you good opportunities all day long. If you've only can trade for the first half an hour in the morning, I'm going to show you a way to use these scanners to buy, like, let's say 2, 3, 4 stocks, put $500 in each one, and do really super well. Every day, every week, and do really super well with that strategy. If you could only be in the market for the last half an hour of the market, I'm going to show you later in the gapping video, which will be the 6th video, how to watch these scanners, see which stocks have broken out over here, and pull them up, check the news, come up here, get ready to gap them in the last minute of the market being open, and make great money gapping. I mean, this is so easy. It really is. It's so easy. What's so hard is to deal with it mentally. That's the hardest part about this, dealing with all this mentally. You shoulda, you woulda, you coulda. I mean, it'll kill you. You'll beat yourself up over and over and over again. Just forget about shoulda, woulda, coulda. Just do. Be agile. Get yourself in. Get yourself back out. Don't take big losses. Take small losses. Get yourself in stocks that have a possibility of going higher, a good possibility. Got a reason to move. Got news out there, and then sell the spikes. Buy back the dips. Goes lower, sell right back out. Take a loss. I mean, you just do that over and over again, and you're going to make lots of mistakes. In other words, you're going to buy that dip. It's going to go lower. You're going to take a loss. But if you keep it to a minimum, your gains will be much more than your losses. I mean, just look at my record. Look how many losses I take. I mean, if you just looked at it from losses, you'd be like, well, that guy gets killed trading. No, because I take bigger wins than I do losses. Just look at my record. I take bigger wins than I do losses. That's it. That's the secret. That's all you got to do. There's nothing to it. I mean, it's just so simple. So I am going to pause this video for a little while. I'd like to actually, I take that back. I really want to trade this stock right now, WITM. I think it's and I really want to focus in on it, concentrate on it. So I'm going to conclude this video, learning to trade. I've taught you a lot in this video, and you know, let's not make trading harder than it is. It's really not that hard. It's more of a mental game than anything else. You got to use the proper tools. You got to watch for the look at CAR. Remember I was telling you this before? CAR. Who's on the bid right now? CAR, and CAR is half a penny away from HOD. HOD is 53. Here's HOD. Let's get Qualcomm out of the way. Can't make any money on that stock. You can make a lot of money on this stock, though. I mean, this thing's up 23%. You know, there is a relatively decent chance that this stock, you know, is going to go up 40% today, in the day 40%, then gap up another 10%, and I could make a nice 20% profit on this stock. I mean, you put, let's say, let's say I just put $2,000 into this stock, and I can make 20% profit. That's $400. That's not bad. Nice $400 a day. If I put $3,000, obviously I can make, you know, even more. Make $600. Have a $600 day. I mean, happens all the time. All you got to do is just know how to play these stocks. Find them with your scanners. Watch for market makers. This doesn't happen all that often, but it happens often enough that you can find a stock like this. I mean, I've found quite a few so far this year, and I mean, I probably find one a week, at least one a week, if not two a week, like this. You know, I'm not saying this one's going to be a gem, but I'm saying this one could be a gem. It could go up a lot. This thing could really run. So, but you just have to watch it. So anyway, don't make trading harder than it is. I'm telling you right now, everybody always makes the one mistake. They buy a stock and they hold it going down. That's it. They make that one mistake. If you don't make that one mistake, you can get yourself into these opportunities, find these stocks with your scanners, buy these stocks, and get yourself into some good winners. Always make sure to check the news. It's very, very important. Always do that. And you can be so successful at trading, so successful. So I'm going to conclude this video, and I will be back in the 5th video, which will be the mental aspects and philosophy of trading, which I've already covered a lot, but I'm going to cover some more. And then I'll do the gapping video, which is the 6th video. And I'm planning on doing the 7th video, the part-time trading strategy, which I was just alluding to a few minutes ago. And that's a really good strategy for playing the market. If you can only do this part-time, you can't sit here and watch them all day and day trade all day. And the strategy works really super well. So I'll cover that in the 7th video. But I've got to get going right now because it is the dipping hour, but this stock is not dipping. It's strong. It's got China news. It's got a market maker that looks like it's accumulating. And I've got a position, and I want to trade this stock. So I'm going to conclude the 4th video here, learning to trade. I've taught you a lot. And I will be back in the 5th video, the mental aspects and philosophy of trading. So I will see you in the next video. Welcome to the 5th video, the mental aspects and philosophy of trading. By the way, you can see where WITM is at now, $9, $10, or $11 here. And here's the chart. It went up to a HOD of 125 today. As you can see, where we last saw this stock at, it was trading at roughly 52, 53 cents. And now it's doubled. Your scanners, these scanners here can really make you a lot of money. Really, this is the secret as far as I'm concerned about trading. And then bringing them up on the level 2 and watching them. And it's not that hard. You can find them. And when you do, you can make a lot of money on them. There really isn't that much to trading. There really isn't. So why do people lose? Why does 90%, I'd say maybe even more than that, lose at trading? Well, in all my years of trading, I can definitely tell you what the answer is without any fraction of any doubt whatsoever. It is the simple fact that people get themselves stuck in a trade and they hold on to a losing position. And the further it goes down, the more money they're losing, the more they won't sell. So they become stuck. And unfortunately, for some of them, the stock that they hold actually comes back and they make a bunch of money on it. That's even worse, because now they're going to hold all of them. You might think that, well, it's so easy. I mean, all you got to do is just not hold on to the stock. I mean, I understand what you're saying, David. This is not rocket science. All you have to do is not hold on to the stock and sell it early so that you take a small loss. I can do that, no problem. Piece of cake. Yeah, well, it's not a piece of cake. It's very easy to say, but it's very difficult to do. There are so many factors that come involved, and they're all emotional. Every single one of them is emotional. And there's so many different factors that become involved that when you actually take a position and it starts going down, you do all kinds of things. Sometimes you'll sell out fast. Sometimes you'll sell out fast and it'll bounce back up and it'll slap you silly, and you'll sell right at the low even, and it'll turn back around, it'll take off, and then you'll miss it, and then you'll say, oh, I'm never going to do that again. And then the next time you'll hold on to it, and you'll think it's going to bounce, and then it won't bounce, and it goes lower, and then you think, oh, well, maybe I should just sell here, and you're almost going to sell, and it looks like it's going to bounce, and then it goes down lower, and then you just can't take it anymore, so you just go ahead and sell out for a fat 20%, 30% loss, and then sure enough, it bounces and goes right back up again, and if you would have held it, you would have been able to get out flat or even make even more money. And it just messes with you over and over and over again. It seems like every move you make is the wrong move. Of course, all the times that you do make right moves will be the times that you don't beat yourself up. So it seems like when you do make your wrong moves, it happens all the time. It's sort of like they just stand out like sore thumbs. So the only real way to play this market and do it successfully, day in, day out, week in, week out, month in, month out, is to play it like a robot and to play it relatively tight. Now, granted, I do use my skill and my experience to take certain positions at certain times that I'll let have more of a leadway, like especially on dips. I'll let dips have more of a leadway. Not always. A lot of times if it's moving down fast and it's starting to bounce and I jump in and it starts going back down to where it just was its low, its LOD, I'll jump right back out again because that's a bad sign. So no telling how low it can go. Stocks can really go low if they want to. So it just depends on what kind of a play it is. But, if you can just know, like for instance, before you even get into a trade, you should have a plan. Even if you're day trading, you should still have a plan. If you don't have a plan, then you should develop one very quickly. Where are you going to get in? Let's just say I decided I wanted to get in right here, right now, at $1.12 on WITM with the chart looking like that. It's bottomed. It made a lower low, but it's held. It's gone up, and it's starting to bounce right there on the chart. You can see. Let's just say I decided to jump in right here. Okay, fine. Jump in right there. That's your plan. You're going to jump in right here. Now develop your plan very quickly. Where do you want to take profit? And more important, where will you sell for a loss? Where? Is that $1.10 right here with all the support? Or if that support breaks, then you'll jump out at $1.09. You can see it drops down quick, so you want to be careful. You know, this thing could drop down to $1.01 real quick. If it does drop down to $1.01, will you get out there for sure? Or is that as low as you'll possibly go? Develop a plan. Now, technically, you'd want to come down here and say, okay, where's LOD? LOD is at 98, the low of day. And we can almost confirm that on our chart here. Not really, because 98 would be down here. According to the chart, it didn't go any lower than 105, basically. 98 could be a stray trade. In other words, just looking back at our history here, I don't see anything down that low. Could just be a stray trade, like somebody put in a market order to sell, and they went through at 98, but it really didn't go down that low. In other words, the bid was never down at 98. So, when you see, people, they take a trade and they have no plan. They don't really know where they want to sell, they just want to make some money. And they certainly don't know where they're going to sell on the bid. In other words, where they're going to get out. They're not even thinking like that. They're just thinking, I wonder how much money I'm going to make on this. Come on, go up. Go up. Okay, I'm now making 50. Okay, great, go up. And they don't have a plan. They just know they're making money, and that's all they know. They don't really, what's their plan? Well, when they get as much money as they can. And they have no plan for getting out. So if it starts going down, they have no idea what to do. No clue. What should I do? I'm losing money here. Should I sell now? I don't want to take this $150 loss. Oh, now I'm taking a $250 loss. Should I sell it here? And then they go, oh, now I'm taking $350. No, forget it. I can't sell now. It's just too much of a loss. Well, when you take your position, you use your best skill, your best judgment, your best patience and discipline to take the right position. And then once you do, you've got to play it fairly tight. At some point, you're going to have to sell. And you need to prepare for that. Because when you're playing OTCBB and pink sheet stocks, you've got to allow for some time. For instance, let's say it started going down, and it depends on where it is. There's a lot of variables. Let's say it had gone way up really quick. Okay, it had gone way up really fast. There's a whole bunch of profit in it. Well, that bid can be taken out fast. So you have to prepare. You have to place your order to sell, say about at least a minimum of 5 seconds, 5 full seconds. One 1001, one 1002, one 1003, one 1004, one 1005. A full 5 seconds before that bid disappears. Minimum. A lot of times you need to do it like 10 seconds. So there's a lot of timing involved playing with these stocks. You've got to anticipate. You can't just watch the bid disappear and sell. You've got to anticipate as much as you possibly can. And if you didn't anticipate very well, let's say it's kind of an emergency to get out, place your sell order at a limit and click on a price where you should be able to get out. That way, for instance, you could place it at 110, but route through SBSH, and hopefully you'll grab those shares at 113 through SBSH, which is actually default for this one. So if you just did 110 and did a limit order, just like I have it set up right there, a limit order, it would go through SBSH by default. But let's just say that when you press the sell button and 2 seconds went by and somebody already beat you to those shares and the shares are gone now and it drops down to 111, well, you're placing it through SBSH at 110. Well, theoretically and hopefully you would still be able to get out at 110, which you should be able to. SBSH might have popped in at 111, or they might do business with UBSS and get you out right there. But don't try to play these stocks like a NASDAQ stock or even like an Amex stock. A NASDAQ stock, you could get filled at pretty much whatever the bid was in about 2 to 3 seconds. Whereas these take more time. Actually, probably like 1 second. These take more time. So you need to allow for that time. Practice a little bit. You'll get the hang of it. You have to be able to anticipate. And a lot of times, if you place them to the right market makers at the right times, you can get out at the ask and in at the bid even easier. It just depends. If it's going down, you can get in at the bid easy. If it's going up, you can get out at the ask easy. So the most important thing, I mean, yes, it's true. You do need to have some skill on knowing when to get in and when to get out. And yes, you need to practice that. And yes, that is very important. There's no doubt about it. But what's even more important is if you don't become successful, it'll be for one reason and one reason only. Because you buy stocks and then they start going down and you hold on to them. It's really that simple. And there's an emotional attachment or an emotional phenomenon that happens when you're trading stocks, that you think they're going to go up, and so you buy, and then they start going down, and you don't know why, and you don't want to lose money, and you think it's going to maybe bounce, and you don't want to sell it for a loss when it's just going to bounce and go right back up again, and you're going to make money on it, right? But who wants to do that? If you buy at 113 and then you had to sell at 111 because it dipped down, and now it's all the way back up to 114 and maybe even go higher here, you know, you would have taken a 2 penny loss when you could be making maybe you could sell back up at HOD, so maybe make almost a 10 penny gain on this. So instead of a 2 penny loss, you can make a 10 penny gain. Who wants to do that, right? Just remember, when you buy in, maybe you did give it a couple pennies. Because why? Because you're trying to catch the bounce. You're trying to get it to have support now. Fine. There's nothing wrong with doing that. Just you've got to place your out somewhere. Pick a spot. So if you bought for 112, maybe you get out at 110. Or, 105 is actually the LOD, so that's actually a technical place to get out. You'd want 105 to hold. If 105 were to break through and it were to go lower than this, that is your cue to get out for sure. Okay? That's technical, playing it by the chart. A lot of times I'll just play the level 2 though. I mean, I'll try to time it and get in on time before it goes and get out at a certain, as quick as I can. It just depends on what you feel your entry is. If you feel your entry is really good, there's so many different things involved. Some of it is just, even a little bit of luck. I mean, you get a break and the thing just starts going up and boom, it just breaks through free and, you're in the right position. Sometimes, it messes with you and it looks like it's going down, so you get out and it goes right back up. You don't have to take every trade. You don't have to trade every stock. You don't have to win every trade. There's some stocks I just stay out of because they're too frustrating. They don't go the way I want them to go. I can't read them right. They don't do what I expect them to do. So I just don't trade them. There's always a trade coming around the corner. There's always something new coming around the corner. I could care less what this company is. I could care less what they do, what they make. I could care less how much money they make. I could care less about any of that stuff. All I want to know is there news today? Is there anything moving this thing right now? I don't care what the news is, as long as it's something good. I mean, I'm not going to hold on to this stock to $5. I can tell you that right now. And it may go to $5. I've seen stocks move from 40 cents to $8, $10, no problem. Lots of times. I was never in them, because I was always in them when they were at their hottest, when they were moving really good. So you've got to stick something on your monitor up here at the very top of your monitor. Stick something up there that says, "Never hold on to a losing position!" Exclamation mark. You've got to remind yourself of that every day. Learn how to get yourself in, but then take a small loss getting back out. Like today, I tried to bounce PTSC. Let's go take a look at PTSC. I tried to bounce it at 79, which was right here. That's where I bought. And it started to go like it was going to bounce, and then it just couldn't do it. and it started to go back down. 78 had like 4 market makers. So you know what? I just sold the 78. I just turned right back around and sold it for 1 penny loss. Do you think that I wanted to sell it right there? Do you think that I wasn't thinking, oh, well, this thing could bounce. I could just hold it and I wouldn't have to take any loss at all. So, why not just wait for the bounce? You don't think I was thinking that? But I know from experience that the right thing to do is it didn't go like I thought it was going to go. This trade started moving down. 78 on the bid. I was taking a 1 penny loss. That's right where I got in, right? But I was timing it, so I got in at 79 on the ask. It went higher, and then it just couldn't make it. And it started going back down. So I just said, you know what? I can always get back in. This thing turns around right here. It starts going back up. I can always jump right back in. But I'm not going to allow this loss to become a big loss. So I sold it for a 1 penny loss. Well, good thing, right? Because it went all the way down. Bounced. Came down. And it's still struggling down here. And who knows? This thing could drop out today. Go back down to the 60s. And if I was still holding it at 79 cents, I wouldn't be too happy at the end of the day if it's back down to the 60s. Now it may bounce back up and go even higher and close up into the 90s or above $1. Who knows? Anything's possible. But I'm not here to speculate. I'm here to trade. Can I make $50, $100, $200, $300, $500 right now? That's all I care about. If I can't, I thought the stock would bounce. It sold off, made a nice little stop down there. It started going higher. The stock's got hot news of a dividend of 0.02 per share. I thought that people would come out buying this thing. It started getting all kinds of volume. It looked really good. And I can tell you right now why it's going down. It's because the company is using the PR to sell shares. It's that simple. They're using the good PR that they came out with yesterday about issuing a dividend for a micro-cap stock like this of 0.02 per share. So with 10,000 shares, you're making what? $200 dividend. A lot of people like that kind of stuff because it's like an investment for them. And it's got a lot of volume, and it had a lot of volume this morning, and it came out firing. I thought it was going to go. So, and look at it. It did start to go. You see that? And I could tell that something was wrong. First of all, they had a PR out, pumping it. Even a dividend PR. That's not just a pump. That's actually giving people money, right? But I could see that they were using the PR to sell shares. Why? How could I tell that? Because I couldn't identify a real market maker on the ask that was doing it. They looked like they were hitting the bid and stepping in on the ask. There was all kinds of buy volume. First of all, the stock is not up that much since yesterday. I mean, it went up a little bit late in the day, and it went up. But it's not up that much. So it's not like a whole bunch of people have a bunch of profit in it. It was sitting down in the 70, right down pretty much where it is, a little bit lower, for a while, like 60 cents for a while. So it's not like a lot of people have profit in this thing. And they used the PR, and then it couldn't go any higher, even on the high volume. I mean, bottom line, there's just something wrong. Most likely it's dilution. So when you see that kind of stuff, don't sit there and go, well, why isn't it going up? Why doesn't it take off? It's got great news. It's got dividends. What's going on? Who cares? It's not doing what it should do. So what? You don't play it. You take a loss. I took a 1 penny loss. But that was after I made 5 pennies on it, gapping it. So I made 5 pennies on it, gapping it today, or from yesterday, and I lost a penny on it, day trading it. No big deal. Now I just sit here and I wait for another opportunity to come around. Maybe one doesn't come today. Maybe one doesn't come tomorrow. But one will come. You got to be patient, and you got to be disciplined, and you got to wait. Don't try to push trades. This is a mental game more than anything else. That's what I'm trying to explain to you. People talk about the chart and these technical indicators and all this different stuff. You read all this stuff in those books. It's all garbage. It's all nonsense. It's meaningless. It has no meaning whatsoever. Because the only way that you can really do what I'm talking about, which is to master the mental aspect of trading, is to trade. You can't read a book and master it. You can't have somebody else like me telling you and master it. I can sit here and tell you a million times in a row, and you're still not going to get it. You're not going to understand unless you've been there. If you've been there, you understand. And maybe you still just never had a plan. Well, now you need to have a plan. And it only takes 5 seconds to develop your plan. Okay, I got in right here. Where am I going to get out at? Right there. There's my exit. I'm not going any lower than that. If it does go lower than that and I miss my fill, I will come down here and I will hit it lower. I will keep following it until I get out. Now you want to be careful because it can really burn you. I mean, you could come all the way down here and panic, chase it, and get out and sell for a loss and turn right back around and go right back up on you. So what you really want to do is you really want to try to time your entries and just get out quick. Get out where there's still, like for instance, you see 7115 going, 7115 going, and you know you want to get out at 71, just hit 71, don't wait, just sell it early. Make sure you get out for where your exit is. And just, say, okay, I got that timing wrong on the entry. I'll try to do better next time. But if you keep taking small losses, it won't devastate you. It won't devastate you emotionally. It won't devastate your account. Then all you got to do is just find a winner. I mean, like PTSC was a good one, and certainly WITM was a good one. So it's not that hard. But what the hard part is the mental aspect of it. Trading is going to beat you up. You're always going to be able to say shoulda, woulda, coulda. Every trader has to say that because very few ever make perfect trades. I mean, nobody ever does that except for once in a while. And what this really stems from, I think, is that people just hate to lose. I hate to lose too. I mean, of course. Everybody hates to take a losing trade. Nobody likes it. But I'm telling you, you better make friends with it. Make friends with taking losing trades. Understand that in order to be successful, you have to take losing trades. What you don't have to do is take big losing trades. But on occasion, and it's happened to me, I've taken big losing trades and just swallowed it. I've taken 50% losses before and just swallowed it. Do you think that when I went to go sell for a 50% loss, I was happy? No, I wasn't. But I'd rather, you look at it this way, it's the glass is half full rather than half empty. It would be better to take a 50% loss and then still have 50% of your money than it would be to hold that and hope it goes up, and it doesn't, and it goes down even further. So, how do you avoid 50% losses? Easy. You jump in right here for, 115 or whatever. You sell for 110 or 111 or 101, absolute maximum low. Right? I mean, that would be below the low of day. So, that's the most important thing. Try to keep your losses as small as possible. Become a professional seller. Anybody can buy a stock. You become a professional seller. Selling for small losses and vice versa, selling for nice profits. Not be getting too greedy. Let's say you bought for 115 and this thing goes up to HOD. Let's say you had bought here. Let's say you bought this HOD break right here, okay? Which was, I think 115. And then it went higher and went up to 125 up here, right? Well, when do you take profits? Do you ride it all the way back down to 105? Right? You would never do that, right? If you bought at 115 and bought this HOD break, where would you sell if you didn't take your profit up here? I tell you where you sell. You sell for break even, 115. You don't write it any further down than that. If you made the mistake and didn't sell for some profit before it went down to 115, that's your fault. That's your problem. I do it. It happens to me. Am I happy when it happens? No, I'm not happy at all. But I'm disciplined. I will not, under any circumstances, write it below here and go negative in a trade when I was positive in a trade. Ever will I do that. Never will you see that happen. Ever. I will get out flat. Now, what would be wrong? See, what happens is you say, okay, well, why didn't you sell up here at 118? At least take like a 3 penny gain. I'll tell you why. This is what happens to you. You did have, let's say, a 10 penny gain. And then when it went down and you only had a 5 penny gain, you were thinking to yourself, well, this thing's going to bounce and I'll have a 10 penny gain again. But because if I sell it here for only 5 pennies, then it's going to bounce and I'm going to miss out. It's greed. And then it goes lower and you only have a 4 penny gain and now a 3 penny gain. And you're like, now I've only got 3 pennies. You know, if it bounces here, I can get 5 again or even 10. So it constantly messes with you. And then it goes down to your break-even point. And you're like, oh, well, now I'll just break even. So now I'm going to have to wait even longer for it to go back up again and make money. So you write it down. Well, guess what? By the end of today, this thing could be down below $1, no problem. So you've got to... The best thing to do is when you spot that hard break and it went up, set a place now for you to take some profit. Whether that's 1 penny, 2 pennies, 3 pennies, just set it and then hold to it. Wherever you set it at, say, well, I'm going to get, now you're up 10 pennies, you say, well, I'm going to get 5 pennies out of this, no matter what. So it goes down, you guys still got 5 pennies, that's where you put your mental stop at. Take it. Never go against your plan. Always just trade it. Take your 5 pennies and say, okay, what's next? Look for another trade on it here, or come over here and look at your scanners. Try to find something else. There's always something coming along. So that's really the secret to trading, is mastering the selling. Selling for a profit, selling for a small loss. If you could learn how to do that, you'll be successful trading. It's not that hard. Use the tools. Watch the level 2. See the action. Check the news. Jump in. Hard breaks like this. Take profits when you have them. Lock in a certain amount of profit so that you come out ahead. And never write it down. Break even for sure. Buy dips. Sell spikes. I mean, when you're up here, you don't know that for sure is a spike. But you do know you're up 8 pennies. And you see the level 2 and you say, oh, it looks like it's starting to get thicker over here and less over here. You know, well, what's wrong with 8 pennies? Sell. Boom. Take your profits. Get good at that. Don't hold on because of greed. Either way. Going up, don't hold on because of greed. Going down, don't hold on because of more greed. You're greed. You don't want to sell for a loss. You want it to go back up again to make more money. You're greed. It always comes down to greed. So get greedy, but get happy greedy. In other words, you're happy with what profits you got. Oh, you got some profits? Boom, take them. Okay, you give it a chance to go higher, but if it goes back down to here, take your profit, some profit off the table. Just get good at that. That's all you got to do. And you'll be successful trading. It's so simple. Again, everybody fails. Why? Because they do the same thing over and over again. They hold on to a stock going down. Simple. Period. That's it. They don't sell when they have profits because they want even more profits. Now, there's nothing wrong with trying to let a stock run. Like, for instance, if you would have bought this at 52 cents where I bought it at, and you would have held on to it and said, well, I'm going to see if, I can let this thing run. Well, you'd have done pretty darn good on this thing. But for every winner that you get like this, that you can make 100% profit, there's going to be 10 of them that you could have made 10, 20% if you just would have sold it. So it becomes like a money management thing. Do you already have a lot of profit? you got a lot of money you're working with, you've been doing really well, you could afford to go ahead and let some of them go and see if they won't go. Pick them carefully. You know, stocks like this that have China news, you can afford to let them try to run. But always never lose on a stock that you were once ahead on a stock. Make that a number one rule. So if you buy for, you know, whatever, 52 cents, this thing goes all the way back down to 52 cents, you sell it. I don't care that you were up 100% on the stock. I don't care. If you didn't take that profit because you thought it was going to go higher and you were going to let it try to run, fine, let it try to run. But if it goes back down to 52 cents again, you sell it. Period. I don't care if it bounces to 52 cents and goes back up to $150. I don't care. You sell it, break even. Period. Everything that you do when trading is what you're doing is you're always playing so that you can fight another day. Because tomorrow, I could find a WITM again. Tomorrow there could be another stock. I mean, there's so many of them that run, and that you could find them early on your scanners, and that you can get in, that you can gap. There's always opportunity to make money. As long as you've got money to make that money with, and you're not afraid to jump in, and you'll jump out for a quick loss if it turns against you, you're a success. If you can do that, you're a success. You made it. You're going to become a successful trader. No problem. Do you understand how this is a mental game? This isn't just making or losing money. It's not that. Because this part of it is easy. It's the mental part of it that's not. It's the mental part that people aren't prepared for. They just don't understand the dynamics that happens when you actually put your money on the line. When you actually click this button and you click the buy button and you see in your position you've got a $3,000 position, a $5,000 position, a $10,000 position, and your money is out there and you're thinking, oh boy, and your hands start to sweat, your heart starts beating, and you're like, oh boy. It's the emotions that take over they can just paralyze you. You don't know what to do. Should you sell here? Should you not? Is it going to bounce? Is it not going to bounce? Is it going to go lower on you? You're going to lose even more money. If you do sell, will it bounce and just go higher and just kill you? The emotions, they just start to... You sit in the back of your mind, don't do it. Don't sell right here, because if you do, it's going to bounce. And you go, well, I'm taking a $100 loss. Yeah, but don't do it. If you sell, it's going to go right back up again. And then so it goes lower, so you don't sell. And then now you really don't want to sell. Well, now I'm taking a $400 loss. Yeah, but if you do it right here, then you're going to really get slapped. Now you're going to lose $400. It's going to turn. It's going to go right back up again. You're going to lose out. So you go, okay, I won't. And it goes even lower. Now you're taking an $800 loss. Now you're crying. $800, oh man, I don't know what to do here. Is this thing going to bounce? Is it going to go higher? What's it going to do? You know what you should have did? You should have got out way up here, took your quick, okay, so the times you get out right there, and it turns right back up and slaps you. Oh, okay, hey, that's fine. I missed out on making some money. That's fine. Because you know why? I can make it if I miss out sometimes on making money. But I can't make it if I write these things down and I lose my money. I can't make it then. Because I can't make enough to cover these losses I keep taking. So the only way to make it is to get on ones, get out quick, take your small loss, but on the ones that you got on that took off and went higher, you make a really good profit on those. You understand? It's so easy. Everybody can do it, but everybody can't do it not because they don't know how to buy, not because they don't know how to sell. Technically, is they can't do it emotionally. They just can't do it emotionally. So really, this is really about emotions. You need to be able to overcome those emotions and be like a robot. That's what helped me. Once I realized I could be like a robot, like Data on Star Trek, once I realized that, and I didn't have to have any emotions, and I could just make all my decisions based upon mathematics, that's really what helped me, because now I just pretend like I'm a robot. Okay, I'm a robot. I have no emotions. I'm going to get in here. It looks good on the chart. I'm going to get out right here. That's where I'm getting out at, period. It doesn't make me feel good. It doesn't make me feel bad. It's just a mathematical trade. That's all I care about. I just play in mathematics, the percentages. It dips down. I buy dips. I sell spikes. I buy dips. It goes lower. I sell. I sell below lots. I buy hard breaks. I pay attention to double tops, double bottoms. I pay attention to volume. I pay attention to news. I watch my scanners. There's always stocks coming around. How hard at this do I want to work? Do I want to check 100 stocks a day? Do I only want to check 50 stocks a day? Do I only have time to do this in the mornings? Or maybe I just want a gap today. I'll see when it's broken out at the very end of the day. There's not much to it. Just be like a robot. No emotion. Everything is mathematical. Everything is a mathematical calculation, a mathematical risk. That's all it is. It's not emotion. It's not about making money or losing money. It's about just making more pennies than you lose. That's it. It's like a game. It's just a game. But can you play the game? Well, you can if you follow the rules and you take small losses. You get yourself in on stocks that have opportunity to go up, and you write them up and you sell them for profits when you got them. You never kick yourself for selling too early. If this thing goes up to, and you got 10 pennies in it, and you take a 10 penny or 9 pennies or 8 pennies, you take a nice 8 penny profit, and then it goes up 50 more pennies. Hey, that's wonderful, isn't it? Good for that stock. Never kick yourself for taking profits. Kick yourself when you don't take those profits and you were stupid. Kick yourself. But learn from it. Say, okay, just think to yourself, where should I have sold it at? Okay, I should have sold it right here. What did it look like when I should have sold it right there? Put that picture in your mind of what the level 2 looked like, so that the next time you see that, you'll take action and you'll just sell. Now look, you're never going to get it 100% right, ever. I mean, sometimes you'll nail trades. That's wonderful. You'll nail them. You'll feel good about it. But don't, that's just more luck than anything else. Just take your profits. Do the best you can. Get yourself into opportunities. Cut your losses short. Cut them fast. Number 1 rule. You got profits, take your profits when it really looks good, or if you want to let it go some, lock in a certain amount of profits. Don't let your emotions get to you. Try to be like a robot. Try to be like Data on Star Trek. Just no emotions. 100% mathematical in everything you do. And with a plan. The last thing to learn, which is the second hardest, the hardest thing to learn is to sell for a quick loss. Selling for a nice profit isn't that hard to learn. Just don't get too greedy, and you'll get it. You'll be like, oh, I'm up 8 pips. Hey, 8 cents. That's a nice profit. Thank you very much. Take it. That's not that hard to learn that. So the hardest thing to learn besides selling for a small loss is to learn patience and discipline when trading. Those are critical. Just like learning to sell for a small loss is critical, so is patience and discipline. Why? Well, if you just take a trade, even when, let's say you took the trade right here, that's not really patience. You really want to wait for a good trade. A good trade would have been here, perhaps, on a dip, and maybe as soon as it started turning green to take it, that would have been a good trade. A good trade would have been if it broke hard right here to take that trade, the patience to wait for that, the discipline to sell if it goes lower. the discipline to sell if you've got some profit. The discipline to sell if it comes back, if you did write it all the way back down and now you're break even. The discipline to sell at break even. The discipline or the patience to wait for the trade to come to you, to look good on the chart for a bounce, to not even play this stock. I mean, you say you played it one time. Let's say you bought this hard break and it went up and you took a 5-penny profit. And then you say, you know, that's nice for the day. Thank you very much. It's a slow time of day now. Things have slowed way down. There's no reason for me to play it anymore. I don't know what this stock's going to do. I don't know if it's going to go down. I don't know if it's going to go up. But now it's just too risky, and I made my money on it. Patience. Wait for something else. Wait for another stock to come around. Wait for another opportunity to get into something that's good. News is fresh. It's just starting its momentum. It's day one of its run. Stuff like that. Wait for something. Patience. Maybe it takes a day. Maybe it takes 2 days. Maybe it takes a week. But you'll find something. Have the patience to wait for it to come. Don't try to go out and make money every day. You don't have to make money every day. What you have to do is not lose money and get yourself into opportunities when they come. That's all you got to do. Don't ever try to push trades. That's a big mistake that newbies make, that new people to this game make. They try to push trades. They try to make money. Well, I got to go out and make my $100 today. No, you don't. Because tomorrow you can make $1,000. No problem. So just patience. Wait for the right trade. Discipline. Sell for quick losses. Discipline. Take your profits. Patience and discipline. Without those, you'll never make it. With those, you'll make it. So I hope I've taught you enough in this video that you can realize what this game takes. It's all a mental game. It really is. I mean, you need to have the right tools, and I've showed you how to use the right tools. But even with the right tools, if you don't have it mentally down, you'll never make it. Never. In a million years. Gotta have the mental aspect of this game down. That's 80% of this game, I would say. Of this trading is 80% mental. Only 20% is your technique. Because you're never going to get it 100% right. And it doesn't matter if I make 8 pennies and you only make 5 pennies. It really doesn't matter. What matters is that you make money. Because with time, you'll get better and better. With time, you'll make better and better trades. With time, you'll take better and better profits. And on one trade, you take a really super good profit. And on another trade, you mess that one up. But it all works out in the end. So to recap, never hold on to a losing position. Learn to take small losses or trade flat, trade even. Learn how to lose on trades. Make friends with losing on trades. Just lose small. You got to overcome that pitfall of hating to lose. Get yourself into opportunities and let them run. Lock in profits. Set a certain stop where you're going to lock in those profits. Cut losses quick. Let winners run. Take profits when you have them. Sell spikes. Buy dips. Learn discipline and patience. Don't try to push trades. These are the things that you need to learn and practice every day. Every day. If you trade every day for the next 5 years, every day you will be practicing those skills. You'll never master them, ever. But you can get good at them. You can get really good. But you'll never master it. So don't always try to master it, but you're never going to be able to do that. But you can get good and you can make lots of money. That's what you really care about, right? That's what I'm here teaching you how to do. It's not that difficult at all. This is more of a mental game than anything else. Use the right tools, Play this mentally properly like a robot, and you will make good money. Now, your skills in trading will come with time. Just remember, buy dips, sell spikes. Don't buy spikes, don't sell dips. Got that? If you buy a spike and it starts going lower, sell immediately. If you bought here, you sell here for sure. Don't write it down. You don't know how low it's going to go. Or you have a crystal ball? If you write it down, you're just on hope. You're just hoping is what you're doing. So you don't know what the stock is going to do. You just it's bullish. It looks like it's going to go up, so you jump in. If it keeps going up, great. If it starts going down, you sell. Simple. Always have that plan. Always be prepared to lose on every trade. Lose a small amount. It's really not that hard. So I hope I've convinced you and taught you how easy this truly is. You just have to have the mental game down and be disciplined and have patience. Sell for quick losses, and you got it. You got it. You're going to be successful at this, all right? So that is the conclusion of the 5th video, the mental aspects and philosophy of trading. And I will be back in the next video about gapping, which is the 6th video, and it's entitled Gapping. And I'm going to teach you how to gap stocks, okay? I'll see you in the next video. Hi, welcome to the 6th video. This video will be on gapping. Well, our first question is how to find a good gapper. Before I answer that, let me go ahead and talk about gapping for a second. You know, gapping is probably one of the very best strategies there is in the whole entire stock market for playing the stock market. I mean, it's just a really high percentage way to play the stock market. It's a really simple way to play the stock market. It's a way you don't have to have a day trading account, because when you gap, you're not day trading. You're buying at the end of the day on one day and then selling the next morning. So that's not a day trade. Gapping is so easy to do. Gapping doesn't take hardly any time. Let's say if you're going to do this yourself, which what I'm going to show you how to do right now. I'm going to show you how easy it is to do. If you're going to do this yourself, you probably need about 35 minutes a day. 30 minutes to find the gapper and wait for the end of the day. And you can probably even do it on less time, like 20 minutes really. And also, you just need a few minutes in the morning, say, 5 minutes. A lot of times you'll sell right away, but maybe you need 5-10 minutes to let it go higher and higher. But for the most part, you just need about 35 minutes, even less. And you can gap every day. Every day there's worth something to gap, that you can find something to gap. But when you do find something, it's a very high percentage trade. The only thing that you really need to watch out for and get down would be A, to pick the right gapper, and B, to make sure you get out in the morning. I mean, you want to be a good seller. You want to have your selling down pat when you gap. Because if you're not a good seller, you can really get yourself into trouble. You'll miss your sells. You'll try to sell here at 109, and it'll be going out too quickly. And then you'll miss the 108 because it went too fast. And you'll be all the way down at 106. Then you'll hesitate and wonder if you should sell. And then by the time you realize it, it's down even further. So you really want to be a good seller when you gap. The better you are at selling, the better you're going to be able to get gapping. Because finding the right gappers is not hard at all. As a matter of fact, I'm going to show you how simple it is. Now, you should have already learned a lot already from the previous videos. But let me just show you how to apply it towards gapping. Right now, the time is 2:54 p.m. Eastern Standard Time. So we are 6 minutes away from the end of the hour. Now, you really don't need to be too concerned right now with gap. I mean, if you've already got some stocks that you know have done really well, you should have them on watch to see how they're going to close. But let's just pretend for a minute here that it's the last half an hour. Here we are with our mover scan and our breakout scan. and hopefully these will become a little more active. See, in the last half an hour, they would be much more active. All of a sudden, your mover scan would come to life. Here we got something up 7%. Not much volume though. That one's up 3%. Let's see what's broken out here. Up 3%. Basically getting not much there. Because what it is right now, we're still in the dipping hour, and stocks are slow during this period of time. They'll start to get faster in the last hour, and especially the last half an hour. So the last half an hour is all you really need. Just come in here, open up your scanners. It's the last 30 minutes. Your scanners will become very active. Look for your movers. Those might be just starting out that just got news a little bit in the afternoon. Look for your breakouts. See how high they are. What you're looking for is a stock that's got, ideally, something nice. It's got a real nice chart. It's making higher highs. This is day one of its run. For instance, if you go back to a chart and look over at Yahoo, you don't see that the stock has moved up for the last 3 days in a row. Like this stock has moved up the last 3 days in a row, and this is actually the fourth day. So technically, from a trader's standpoint, this stock is now very weak. It should dip down. And, it started off, around 60 or around 40 or so. So it should come back down quite a bit. Let's say to, over the next, well, it just depends. But, most likely over the next 2 months, it'll come back down to around 60 again. But you never know. These stocks that get news with China, you never know what they're going to do. This stock seems to run pretty darn easy, but I've seen a lot stranger things happen. Let's put it that way. So, what we're really looking for is to have our scanners find us stocks, and then over a period of 15, 20, 25, 30 minutes, you're going to just pull up stocks off the scanners. You're going to go check the stock, make sure it's got a good chart. Make sure it's up nice. Make sure it's got volume and it looks active. You don't just want it to be totally dead. You sit there and you watch it in the last 15 minutes of trade, and for 5 minutes it doesn't even make a trade. No, that's not a good stock. You want something that's active. You want something that closes strong, not closes weak and going down, but closes strong. It really, there's going to be day traders at the end of the day who are going to exit no matter what. And that's like clockwork. So let them exit. Don't think that the stock is weak just because they're exiting. But generally speaking, you just want it to be as strong as possible. You want it to have some news, a reason for moving up. You want today to be day number 1, not day number 3 or day number 4 like this one. You want the stock to have volume for the day, nice volume. Volume is subjective and relative, basically. With experience, you'll get that down. But it's possible to gap a really super good stock that doesn't have a lot of volume. It just depends. Did it just get news 20 minutes ago, and it's only been trading for 20 minutes with that news, and it's gone sideways all day long, but then at the very end of the day, it's gone straight up in the last 15 minutes because of the news, but overall it doesn't have that much volume? Well, that still could be a very good gapper because the news came late. But if the news came this morning before the market opened, you want to have some nice volume, and you want to close strong. You want to have something pushing it. But just because a stock doesn't have something pushing it like news, doesn't mean it's not a good gapper. Let money speak for itself. Money will say whether this thing, not just money, but circumstances will say whether this thing is going higher or not. Whether it closes strong. That'll suggest it going higher. And when other people see it tonight, first of all, what does it mean if a stock closes strong? Well, it means a lot of things. First of all, it means that the stock is having an easy time going up, right? There's not some big seller holding it back. It means that people are buying it. There's more buyers than sellers. The buyers are outweighing the sellers. So there's more demand than there is current supply because it's going up. It's got volume, so it means it's got attention. When a stock closes strong, it means a lot of different things. So use that to tell you whether this thing's going to gap or not. Because when other people see it later on tonight, when the market closes, and they see the stock went up 60% and it closed basically at its HOD, a lot of volume, they see that technically as a stock in their system that they use, or just, somebody told them that this thing's going to go higher. And, I gapped this stock a couple days ago at 63 cents. I sold it at 66 cents, made $210 off of this stock. I was happy. But people who were playing another system and saw that this stock was going to go higher, or took that bet, well, they did well, didn't they? But, I had a few things going against me. First of all, I don't play that system, and second of all, I was really busy doing the videos and with trading, so, well, actually I wasn't trading so much. I mean, I probably could have caught this stock better and made more money from it, but I was really busy with these videos trying to get them done. Okay, the time is 3:02 right now, and what we want to do is find a stock to gap. Let's just go take a look at TQWD. Okay, would this stock be any good to gap? Let's take a look at it. Look at the chart. That chart looks like an Etch-a-Sketch. It's not a good looking chart. The spread is 0.007 and 0.009. That's like, I'm not sure, but 30% spread or something. And it only has 1.1 million volume on a stock that's trading for less than a penny. So it doesn't have any volume at all. The fact that it's up 50% is meaningless. So this would not be a good stock to gap. Let's take a look at something else. Just looking on the scanners for something. This stock's got a little bit of volume, 305. Let's take a look at BMD. It sounds like an Amex. Okay, generally speaking, a stock needs to be really, really hot for you to gap it on the Amex. Something really good. And generally speaking, stocks that trade for this much money don't gap all that much, unless they've really got something pushing them, like they got shorts. It's a short covering that's pushing them. And there's ways to get an idea if that's happening or not, but with 2.3 million volume, that's definitely not happening on this one. So let's see what else we got down here. Those are all negative. RNO, that's another Amex. When you start seeing a lot of that, though, you can start to see that the Amex market is moving. And you definitely want to jump in if it is. Let's just go take a look at RNO. Okay, this one's got a little bit of volume. And it just started going up not that long ago, too. So let's go check news. Okay, I'm here on RNO. It's Rio Garcia Gold Mine, whatever. The last news I see is Thursday, which was yesterday. Exploration drilling confirms depth extensions of main mineralized zone. Okay, let's just go take a look at 52-week range. It's already broken out of that. Let's go look at the 5-day chart. That's bullish. Okay, it gapped up this morning. And it has one nice chart, 320. Let's go take a look at the year chart. It's broken out. Okay, we know we got a stock that's broken out. Let's go take a better look at it. First of all, it's got a spread, a 2-penny spread. It really doesn't have that much volume. 1.6 million is not very much at all, especially for, well, it's just not much volume. Look at the chart. See how the chart's broken? You know, some green lines, red lines, but just looks really broken. You really want it to be a real solid chart. Real solid all the way through. That means it's got good volume throughout the whole day. That's what you're really looking for. We'll find one. So that's no good. There's still, it's 306 right now. That thing doesn't have any volume. Just let the scanners go and let them try to find something. I'm going to pause the video and, you know, the good time will be the last half an hour. Right now is not a real good time to try to find gappers because it's still too early. I mean, you can certainly look and you can certainly find something. I'm just saying it's not the prime time. I could put my efforts in the last half an hour of trade and find a lot more stuff that's actually moving. Because you got to remember, I'm not actually going to buy it now. I'm going to buy it at the end of the day, the very last minute. So my goal is not to make money right now. It's just to find something for the very last minute to buy that's good, that's hot, that's got news, that's moving, and a few other different variables I'm going to show to you. But what I'd like to do first is show you how to find these, how to find a good gapper. And we're going to do that with our scans, and I'm going to do that, hopefully, we'll find one today that's worth gapping, and I'll show it to you. So I will be back after pausing the video for a little while. Okay, it's 3:21 right now, so there's 39 minutes left. And I just wanted to show you one. Came up right here in my breakout scan. This one's got 13 million volume, 13.5, but it's not very much when you consider it's trading for under a penny. And look at the spread. The bid is 0.085, and the ask is 0.095 or 0.0095. The bid 0.0085. And look at the chart. The chart tells it as well. The break right there in the chart. Just these squiggly little lines. It's not a nice looking chart. There's not enough volume. There's not enough action in this. It's not even good enough to even go check the news to see what's pushing it. It doesn't matter that it's up 46.9%. It's not a good candidate for a gapper. To be a good gapper, we definitely need more volume, more action. We need a better looking chart than that. And hopefully it would have some good news. But it doesn't necessarily have to be a good gapper, because a lot of times the best gappers are ones that don't have news but are moving up. You don't know why. Then you buy in for the gap, and then they come out with news after hours, or even better, pre-market the next morning. And those gap up really good. And the reason why they were moving prior to the market closing was because people knew about the news and were buying. And we were able to catch it with our scanners, buy also, and take advantage of when the news comes out and everybody learns about it and the thing gaps way up. WWAT has popped up here. It's up 15% on 3 million volume. Let's go take a look at it. Okay, the chart is a little bit better. It's not really what you want to see. The volume is 3.2 million on a 49-cent stock. But it's a Friday, and it's getting some action right now. The chart isn't bad. So it's worth going to take a look at right now. It's at 15.8%. This one is worth looking at right now as far as news to see if there's anything pushing it. So I'm going to go check the news. Okay, here's WWAT. And it doesn't have any news. Not today. So we don't know what's moving it. Let's go familiarize ourselves a little bit better with it. Last trade's 47. Its 52-week high is 59. Let's look at the last 5 days. Has it already run for the last 3-4 days? Let's see. It did go up on Wednesday, and then it kind of sold off a bit on Thursday, and then here's today on Friday, going up, making a nice move. And that's actually a very bullish sign, because usually stocks will sell off on a Friday because people don't want to hold over the weekend. This one is not selling off, and also it's doing well for this late in the day. There's 35 minutes before the market closes, and it's doing well. Doesn't mean it's going to close well. We'll have to see it close well to gap it. However, so far it's a good sign, and it did gap up this morning. It did gap up the other day. See how so generally this stock likes to gap up. It's having its best day so far today on no apparent reason. In other words, was no news out. The news came out Tuesday, outlook for 2007. So that's possible that's the news that's pushing it. People are starting to see this as a good outlook. Or it's even possible that more news is coming and people know about it and they're buying. So let's go watch it. Its HOD is 49. It is now at its HOD right now. This is a bulletin board, you can see. We just got let's see, look at the bid, 48.5 to 49. And we just got a trade that went through at 48.95. Remember what I told you before? When you see a stock going up and you see a trade in the middle between the bid and the ask, that's usually a bid. That sell just went off by somebody buying at that price. So right now this thing looks fairly bullish. Somebody just bought 37,000 shares at 49. Remember now, this is moving on no news today. So we're looking to see, is there something going on with this stock? Is there something up? Is there some type of, is there news that's coming out on this? Or is this just moving from the outlook? Are people investing in this stock perhaps? You know, what's going on with this thing? But technically, we're looking at volume. It's got 3.4 million, which is it's not real hot. That's obviously from the chart, but it's got potential. So that's one stock we're going to keep an eye on, WWAT. Now it's 33 more minutes to go before the market closes. I'm still just watching my scanners here, watching for something to pop up. We are still getting some trades going through. Now I'm wondering, how many shares are there with these three market makers? I mean, I've seen some shares going through, but these market makers aren't moving yet. So it's interesting to see that. Now, this is HOD, but it didn't, let's see, it did make the HOD here, I think, and now it's back there again very quickly. So what we should see, if we still keep seeing these buys go through, is the ask to start to disappear some, and even disappear altogether and move up and uptick to the next level. If it doesn't, that's not a good sign. We definitely want to see this thing move up. But there's still 32 minutes left in the market open, and lots of time for anything to happen. And in order to gap this stock or any other stock, we need to have it close strong. Close a really nice close. It doesn't have to be super strong, but it has to be bullish. This is the idea behind that, okay? The reason why these stocks gap up is simple. For one thing, one of the reasons why is they don't trade after hours, and they don't trade pre-market. But the thing is a certain time, most of the time it's for most people it's like 10 minutes, and some brokers now even have it for an hour or so. You can actually bid higher on these stocks. You can actually have trades go through pre-market. And but this is the idea though. Let's say that this stock has news. Just came out with news this morning. There's a nice 60,000K buy. It's pretty bullish. I'm watching this stock with interest here. You know, it's got news, reason to go higher. The stock's kind of taking my attention here because I can just tell for this slow time of day and for what's been happening in the market recently, we're getting some decent sized buys going through at the HOD. And with no news out there, it's just got my attention here for a minute. Just watching this stock. Now, let's say a stock like this has got my attention. I like to go do a little bit more research on it, just to take a look at what's its 1 year chart, and where are we at in comparison to what it did before. Okay. And what's it actually trading at? It's actually trading at 49. Okay. Okay, so you can see it's had a lot of time to consolidate. Oops, wrong one. It's had, let me go back to 1 year. From the time that it made its high, 57, it's had a lot of time since, June or May. It's had a lot of time to consolidate down here and sell off and everything. And now it made a move up, and it's gone sideways almost, and now it's trying to make another move. So 57 will be the big break. I think it's 57. Let's go back and look at it again. 59 is the big break, is the chart break on this thing. And it's looking pretty bullish at 49, so we definitely want to pay attention to this stock. Again, to look at the 5-day. 5-day is very important. It looks very good. Looks very good. No news. And I kind of like them when they don't have news, because if you really watch them and you see something, you can see stuff that's going on without even the news. So you got to remember, like if this thing had news and it was moving up, that would be expected, right? But if this thing's moving up without any news, you start seeing some big buys going through, more action. Especially at the end of the day, you know something's going on, something's up. This thing's going to come out with news after hours, it's going to come out with news Monday. That's the idea. And so there's a good chance that they will. Not, I don't know how good is good. Maybe 30% of the time, maybe 20% of the time. But when they do, you really hit good ones. Hit some big gappers. Again, you can see from the scanners that it's not very active right now. I'm getting some stocks in the above $5 range here. Hardly anything for micro-cap stocks. It is 27 minutes to go. From this point forward, 27 minutes to go to the end of the day, the stocks that would be potential gappers for the day will become more and more active. And they'll pop up on your scanner more often, and you'll get a chance to go look at them. You'd only need a few minutes to decide. Just need to go check the news really fast, bring up Yahoo, check the news, check the chart, look at the volume, look at the action, and get a good idea of whether this is a gapper. See how it closes. The stronger it closes, the more chance of it being a good gapper. And that's all you gotta do. I mean, what you're really doing here is you're following the money. You're letting money tell you what's gonna happen. People can tell you all kinds of things and be wrong, but money isn't wrong very often. You understand what I mean by that? I mean, if people are putting their money into this stock at the very end of the day, right before it closes, that's it doesn't necessarily mean it's gonna gap. I mean, you got your losers, but it's a good indication. And people will see that later tonight, and they'll want to buy. They'll think it's going higher. So, and a lot of times it does. A lot of times they're right. But for gapping, this strategy is just to play the gap. That's our strategy. Play the gap and sell, basically sell it the first thing tomorrow morning. Now, sometimes you look at them and you hold them like I held on to the gapper this morning, which was PTSC. I gapped it at 0.775 and sold it at 0.83, and it opened at around, I can't remember now, but like maybe 8.1 on the bid, so I held it for 2 more pennies. It looked like it was going to break out and go higher, and then it didn't. It stopped at 84. I sold it at 83. I mean, when I sold it at 83, I was thinking to myself, oh, what if this thing turns around and goes higher? And then I said to myself, who cares? You got your profit, you got your gap profit, take it, let's go. And I took it. Simple. And, I did that with WITM. I gapped it at 63 and took it at 66. Well, guess what? When I sold it at 66, it turned right around right there and went up. Went up to like 85 that day or 90 that day or something like that. So, that happens. And, but you make money because you take your profits when you got them and because you cut the losses fast. You do that every day, every week, every month, all year long. You make a lot of money doing that. That's a winning strategy, and it works. Okay, so you can see it is now 3:36. We have 24 minutes left in the market. This stock, WWAT, is at HOD. No apparent news. I'm watching HDSN here. Now, the only reason why I'm watching this stock so closely is because I don't see anything else. There's nothing on my mover scan. There's nothing on my breakout scan. So I don't see anything else to watch right now at the moment. If I did, I would be pulling up other stocks and checking their news, checking their charts. Okay, we're getting more action here. This thing's really starting to look bullish to me. Going to announce it in the room. Okay, it's starting to get even more bullish. I want to just go over here real quick and check the news. I'll always come back here and just keep checking this news, just to make sure that something doesn't pop out. Make sure we're not moving now on news. Okay, now we got 4 market makers at 0.485, and we've got 2 at 4.9. This thing is looking more bullish. Okay. I like the way this thing is looking. I mean, we got 23 minutes left. It's at HOD, getting some pretty decent sized buys here. Some pretty good volume. You can see the market's not very active right now from my scanners. Nothing's popping up. So I just happened to be looking at one, found this thing through the breakout scan. I'm still watching it, and it's moving. So it's got all my attention right now at this moment. Okay, we got BZET up 81%, but only on 579,000 volume. That's just not enough. I'm not even going to bother looking at it. Gotta have more volume than that. Okay, we got an uptick here. We got a new HOD. I'll be right back. I'm going to make a signal call. Okay, I just sent out a signal alert that I'm watching this stock for a possible gapper. I've been watching it now for 10-15 minutes, and it does look bullish. I've checked that it has no news out today, just an outlook out a few days ago on Tuesday. And it's got a real nice looking chart last couple of days. Today is its best day. It's uncharacteristic for a stock to close or to be so strong with 20 minutes left in the market on approaching a weekend. Most people don't like to hold over the weekend. So this stock is, so far, pretty darn strong. Now we've got a 30,000K buy. Just from my experience and from my watching stocks, I can just tell you right now that this looks very bullish. Doesn't necessarily mean it's going to go up, but there's a good mathematical possibility of it going up because I can tell from the action, from the people who are buying 30,000 shares at 50, so they just stuck $15,000 into this. People don't generally do that when there's 19 minutes. I mean, that 30,000K buy is not a day trade. We got 19 minutes left today. So they're not trying to get in, going to sell for a couple pennies higher. I mean, it's possible, but most people wouldn't. I mean, look at the chart. It's just gone straight up. A day trader would be like, well, I'll get it on another day and make a trade on it. Today, 19 minutes left is not a day trade. So they're putting their money into this for some reason. Maybe they're just investing. Maybe they've got wind of news. Whatever. There's a lot of different variables. But what we care about the most is that it's getting strong at the end of the day. that's a good bullish sign to gap it for it to go higher. So as you can see, more than just the chart, more than just news, which this one doesn't have news today, is also action at the right time of day. So a stock that's wanting to get stronger into the close is really bullish. I mean, who would hold the stock overnight, especially over a weekend, but overnight, when there wasn't a reason for it? There wasn't this idea that it was going to go higher. So that's what we're looking for. That's really like money telling us what's going to happen before it happens. It's going with the momentum, everything. But gapping is so good because let's say you bought here at 50 because you thought it was going to go higher. Well, what happens now if it dips back down and it goes back down to 46? You know, do you sell there or take your loss? Okay, so let's say you do. You take your loss there, and it turns back around and starts going back up, and then you missed out. So day trading can definitely, you know, mess with you, and it can be difficult, and you really got to be disciplined. You really got to have patience. But you can certainly make a lot of money at it, but you got to work at it a lot more. Whereas gapping, you just wait for the last minute, and then you buy, no matter whatever the price is, as long as it's closing strong, it's not weak. In other words, you don't want to gap it when it's dipping down real bad. You want to gap it when it's doing good. Now, it's okay if it goes up and then dips before the end of the day and then starts back up again and gap it right there. That's fine. Matter of fact, that can be good because you get the sellers out. But you just don't want it to be weak. You don't want it to close weak because the stock that closes weak gaps down, not up. So this stock is dipping here a little bit, and I'm just watching it. Let's see if we got anything on our scans. Up 50% with 2 million volume. Look at the price, 0.01, and 2 million volume. That's like having no volume. WWAT is again on the breakout scan. There's not much out there. It's Friday. The market's down today. There's not much moving today. It's pretty slow. It's Friday. People don't like to buy stocks going into a weekend. That's why when you do see one like this, they can stand out like sore thumbs because they're the only ones doing anything, and also because they can find them so easily. And by virtue of them going up at the end of the day like this and closing strong means that they have a reason to go higher. Maybe a reason that somebody else knows. And there's a leak in the market, and people know about it. Friends of friends, whomever. CEOs, friends, long-lost cousins. You know, people in the world, they know about these things. They get wind of these things, and people buy, and hey, it's, you know, it's the way that it is, and you can take advantage of it. That's all I know. You can come in here and let the money tell you what's going on, what's happening. This isn't investing. This is taking advantage of things that are happening out there in the market and making our small little money from it. Sometimes we get a nice pop. Sometimes we just make $100, $200. But hey, it's a good way to profit from the market. So there is 14 minutes left. Not really getting much on my scanners at all. So, but fortunately, this one looks pretty good. It's hot as 50. It's still holding strong. Bidders are in at 49. Just one market maker here in the way of HOD. You know, I think it's looking pretty darn good. Okay, that market maker's out of the way now. We're back at HOD. How fast will a market maker step in here at 0.495? Remember, a lot of people aren't going to know what's moving it. Like, for instance, I don't know what's moving, but let's just assume that there is something moving it. Well, there will be more buyers at the end of the day, and they're going to come in here shortly and start buying this thing, and we'll close over 50 or over 51. That would be a good, strong close, good, strong stock, and it'd definitely be worth gapping. Now look at that, 3 market makers, pop, 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 all at 0.495. It's definitely setting up here. 13 minutes to go before the market closes. So what have we done with this stock? We're looking for a good gapper. We found it on the scanners, on the breakout scan. We told you what to look for in the chart, in the action, in the volume, and to see how far it's up, whether it has news or not. This one doesn't. Look at the 5-day chart. Make sure that this isn't day 3 or day 4 of it moving up. This is really the best day. We can almost call this day 1 of it being hot and gone up like it has. Looking at the stock's history, this one's near its 52-week high, 59 cents. So it's coming back from having sold off, and if it's strong, it'll break that 59 cents and go even higher. We've checked the volume. It's probably, decent volume for today, and getting more volume at the end of the day, which is good. That's probably the most important thing. And checking level 2 for too much thinness. What I mean by that is, first of all, it's got a spread, or like maybe there's some price here at 495 and this is 0.5, which is a good tight spread, but then all of a sudden it just drops off, like maybe one at 49, then one at 44, then one at 38. That would be way too thin. You need the level 2 to have some thickness. This one's at 0.495, 0.49, one at 0.48, then 3 at 0.46. It's got some thickness to it. Ideally, it would be even thicker than that, like it would be over here. That would be ideal. Like even 3 levels, like at a 49 and have that many, 48 and have that many, and then 47 and have that many. It'd be a real thick level 2 on the bid. In other words, buyers are waiting. That would be ideal, but not necessary. So you got 2 things going for you here. Number 1, you're having money tell you that this thing's going higher, especially if it closes strong, right? And number 2, and you got, this isn't moving because of news. Now, if it had news out, okay, it would be obvious, and you just rely on all the people who are going to learn about the news over the night or tomorrow morning, and they'll learn about the news and they'll want to buy, and you'll make the gap profit. But on this one, you could do even better, because if it comes out with news and the money was showing you that the news is coming, just the news hasn't arrived yet, you do even better, because it'll be more of a surprise and more people will learn about the news and they'll want to buy. Just depends on what the news is, obviously. But bottom line is you're letting people with the money tell you what's happening without you actually knowing what's happening. So the money is doing the talking. And since you're gapping, you're not getting caught up in the dips and the spikes. You're buying at the very end of the day, hoping it opens higher the next day, and you make your gap profit. It's a great way to play the market. It really is. Okay, there is 9 minutes left to go. My clock is over there somewhere. That's okay, because we won't need it today. Okay, there is 7 minutes left, and just really not getting much on the scanners at all. It's just because it's really slow. It's a Friday. 7 minutes left in the market. There's just really nothing moving out there. Now, this stock's been a little bit slow here, which is not really what I want to see. I definitely want to see it close stronger here. I want to see some more buying towards the end of the day. And so I'm just watching it. If it doesn't happen, then I just will pass on this stock. Just trying to get the best feel for it I can. Still watching further opportunities. ANO, there's another Amex stock. Yeah, some Amex stock. I'm going to bring this up on another monitor here. Yeah, it doesn't have any volume. It's only got 500,000 volume. It doesn't have anything. So this one's still my best opportunity right now. 3 market makers. Market maker going away at 20,000 K buy. Okay, that's what I wanted to see. I want to see that. I want to see more people come in. I want to see more buys go through. More bullishness. I got 6 minutes to go. Just sitting here watching to see how this thing is going to close. How it closes is whether or not I'm going to gap it. The stronger it closes, the more I'm going to be willing to gap it. If it gets weak on me and starts dipping right before the close, I'll just pass. No big deal. Plenty of opportunities to come along. You only want the hot ones anyway. Okay, got some more buys there. We got a 47,000 buy. This thing definitely looking bullish to me. There's been some good sized buys, a 60K buy, a 50K buy, a 47K buy. There's a 25K buy. It's definitely looking bullish to me. It's getting stronger. There's 5 minutes left to go. It's looking very good right now. More market makers are coming on the bid. Now you see, this is perfect. This is setting up to be a perfect, well, not a perfect gapper, but setting up to be a good gapper. Why? Because something is up. Who is buying with 5 minutes left in the market? Who? Now we're getting some more action here. I just want to go check to go make sure we don't have some fresh news. You always want to do that. I mean, you always want to be knowing what's going on. You never know. I've come in here and I've seen all of a sudden, bam, 5 minutes before the market closes, big news. Usually not that close. Okay, now we're at a new HOD. We've got a bunch of resistance here. We've got market makers coming in. Something is up. Okay, I'm telling you that right now. Something is going on with this stock. We got 4 minutes before the market closes, and this thing is definitely looking strong into the close. Doesn't necessarily mean anything, but it's certainly a darn good sign. And I am going to gap this stock today. Okay, it definitely looks good. Look at the chart now. Look at it going higher. There's 3 minutes left. Look at it. It's very, very nice. And I'm definitely going to gap it. Now there's 3 minutes left in the market, so I'm not going to gap it yet. I'm just going to let it go up like this. I'm going to play the gap. In other words, I'm going to play the last minute right where it closes, and I'm going to sell for when it opens at. I'm not going to get caught here and then buy right here and then have it dip on me and get a worse price. I'm going to buy it at the close. It doesn't necessarily mean you have to do that. You can buy it early. You can be a trader. If it starts going back down, you just sell it flat or sell it for a small loss. Don't sit there and hold it. Or you can buy it in the last minute and do well. What we want to see, we're just playing the gap here. We want to see bullishness, and I'll tell you right now, this thing looks very bullish. Something is going on. Something is up. This thing's about to come out with news right after hours, maybe, or something. Somebody knows something. This thing is moving for a reason, and there's no news out on the wires. This thing is definitely moving. We now have 2 minutes. I'm now going to buy the gapper. I'll be right back. Okay, so you can see the chart here. It's now at 525 on the ask and 521 on the bid. People are trying to come in front of 0.52, trying to get the best price they can, but still be coming in front. Another bullish sign. Got a lot of buys going through with the ask. It's closing stronger and stronger. There's less than 1 minute left in the market. It looks really, really bullish. And it got really bullish at the very end of the day, which is like a perfect sign. That means that somebody knows something. The stocks just don't do that. Unless something is up. Either A, it has news out already, or somebody knows something, news is coming out. So you see how easy that was to find a stock? It kind of stood out like a sore thumb because it was the only thing moving. But on a Friday like this, market's now closed. On a Friday like this, that makes it easy for you. Okay, so you can see that, we found a stock on our breakout scan. It was about, 35 minutes before the market closed, something like that. And it was the only one out there, so we were able to find it really easy. And we saw it about here. And we just were watching it just to see what it would do, and it started to get stronger. And at the very end of the day, it got its strongest, and it closed right at its HOD its high of day is 52.5, and there's 52.5. So it's a really bullish sign, and there's no news on it. I mean, if there was news on it, there would be a reason for it to have gone up like that. Everybody would have known what it was moving on. But and that still would be a good gapper. That would be a very good gapper, because more new people would learn about the news over the weekend or overnight, and they would want to buy the next morning, so it would gap. But since this one was moving like that for no apparent reason at all, that's a really good sign that there is something coming, that somebody does know something, and that there will be news after hours, or over the weekend, or Monday morning, and this thing will gap up really super nice, hopefully. Depends on what the news is. Now, a lot of times, the news won't come out for a week. Somebody gets something that knows something a week in advance, or 2 weeks in advance. But a lot of times it'll happen right before, because these things can move around a lot in 2 weeks. And people want to know right before. They jump in and they take advantage of the early movement as well. I mean, sometimes this could be huge news. This thing could do a double and go up to $1. So it just depends. But we're just playing the gap, and this is the strategy, and that's how easy it was. I mean, there's no way I could have planned this. It just, you go out in the market, you see them on your scanners, you pull the stock up, you watch it. I mean, this thing could have easily just have gone down, and it wouldn't have been a gapper. See those all the time. Or it could have just stayed the same and not did anything, and it didn't have much volume. Well, it wouldn't be a gapper then. The only reason why it was a gapper was because it closed really good, and you saw it happen. That's it. There's not much to it. All you got to do every day is just find those, or if you can't find them, then don't gap anything. And if you do that and you gap this, and you could have got it for 0.525 at a ton, and we'll see what it gaps for on Monday. And you'd be surprised how you could sell it for 0.55 or 0.56 or even 0.57, 0.58. Or maybe it gaps up really good, you get 60 out of it and make a really nice profit from it. Very, very easy, very, very simple in the last 20, 30 minutes of the market being open. And you saw how easy that was. Very, very simple. And always use the other things that I've taught you about trading in general. I mean, you still have to cut your losses short. And the next morning, sometimes you'll have trouble selling. So a good strategy to use, let's say this was the next morning, it was Monday morning, and it didn't gap up at all. Or if it did gap up, or if it didn't gap up, doesn't matter. You're going to sell, right? Well, put your order in for here to sell. Don't try to get out right there, and if you don't get out right there, you just missed it. Sell for right there, and sell early, and hopefully you'll get that. If not, hopefully you'll get that. Worst case scenario, you should get that if you sell early and you sell lower. One more important thing. If you gap a stock and it gaps down, for any reason, I don't care what the reason is, if it gaps down, it's now red, okay, you sell it immediately. Don't wait. Don't wait to say, oh, I wonder if it's going to bounce. Trust me, it won't bounce. If it gaps down, it's going to keep going down. Sell it immediately for whatever price you can get for it. Take the loss immediately. Make that an absolute #1 rule whenever you're gapping. And another thing is, unless it's really got something pushing it, like some really good news or something, okay, something that's got to be good, okay, sell it right away in the next morning. Just take your gap profit. But if it's got a reason, or if it just, the market makers start lining up on the bid and everybody just starts buying, okay, it's all right to hold it. As long as it looks like it's going to go up, and it is going up, you can hold it. But get ready to sell it, though, for a nice profit. Just take your profit and sell it. Once it stops, maybe it spikes up for you real nice, and it stops, sell it right there. Just get rid of it. Take your profit. But don't get caught in the downward spiral. You want to take that profit. So most of the time you sell right away. But sometimes you just have that feeling where, boy, I think this thing might go higher. That's fine. And if it does, fine. You can hold it. If it does, it starts going down, don't ask, why is it going down? It's got great news. This thing should be going, it should skyrocket. Yeah, well, it's not. It's going down. So what are you going to do? You're going to hold on to it? No. you're going to sell it. You got to sell for break even? Sell for break even. Can you sell for a little bit of profit? Sell for a little bit of profit. You got to take a loss on it? Take the loss on it. Whatever you got to do, but don't hold it. You have a plan. You're going to sell it. As long as you can follow that, just like day trading, you're going to be successful. Because you'll get on ones where you'll buy at 525 and this thing will gap up to 60. Boom. Just made a beautiful profit. And you can get these right more than you'll ever get them wrong because why? Look at the chart. And it closed strong. And without no apparent reason of it for it to close strong. So something, that's very good. Something is up. So we'll see. And that's how easy it was to find them. There's not much to it. Gap stocks that look good, that are going up, that are making higher highs, that have volume, that have action at the end of the day. Gap those stocks. Gap stocks that got good news, and they're doing the same thing. Regardless, though, of the news or whatever, you want it to look like this, especially at the end of the day. Doesn't have to look quite like that, but it has to be bullish. You know what I'm talking about. It has to have action, it has to be good, it has to make going higher. That's it. You gap it. Not much to it. Real easy. And gapping is an excellent strategy for making money at the market. I mean, you build your account up to 5,000. Now you can start gapping 2 stocks in a day and put 2,500 at each one of them. You build that up to 10,000. Then you can start putting $5,000 into 2 different stocks. And you gap that, and build that up into 15, 20,000. And then you can start putting $5,000 into 4 different stocks. And gap 4 stocks at one time, if there are 4 stocks to gap. You know, don't just throw your money in anything. Throw it into hot stuff. And, you know, let's say this was June or October, and you had a, you know, $30, $40, $50,000 in your gapping account from gapping all year long. You know, you could put $20,000 into this and gap it. I mean, if this thing comes out with news and opens up at 60 cents, you know, you'll make a nice, $1,600 profit or so. So, you know, I mean, and it adds up. It starts building up over the whole year. It really builds up. It really adds up. But the trick with this method, what happens is you get a lot of good winners, and you don't take your losses on those bad guesses where you have to keep selling for small losses, and you don't ever take that big loss because you sell. Just the biggest thing you need to worry about is sometimes these things will drop out on you. So you got to get out in the morning. You got to get out. You got to sell. The best way to do that is to come a couple ticks under. Find some support like right there. Click on that and hit the sell button. And you should get out. So that's pretty much it. You got to practice that a little bit though, okay? Practice a little bit. Practice on your selling. Practice getting out. It's very important. And that's it. It's so easy. The gapping is so simple. It's so easy to find them. It's so easy to gap every day. It's such a profitable strategy. So that's how you do it. That's how I've been calling them for all these years, and that's how I've been playing them, and so it's so easy to do. So that's the end of this 6th video, the gapping video, and I will be back in the last video, the 7th video, part-time trading strategy. Let's just say you have, well, this is a part-time trading strategy, the gapping. It's at the end of the day, but let's say you don't have the end of the day available. You can do the beginning of the day. And I'll tell you, and I'll show you, or you can do both, the beginning of the day and do the gapping. It's all up to you. But I will show you this strategy because for some of you it will work well. For others, the gapping will be better. So it's up to you. So I'll be back in the 7th video. That's the conclusion of the 6th video. And I'll see you in the next video. Hi, welcome to the 7th video. Part-time trading strategy. This is going to be a fairly quick video. I just want to explain to you about a strategy that does work. It's a little tricky, but it does work real well if you can do it right. So I'd like to explain it to you. What this strategy involves is simply using your scanners first thing in the morning when the market opens, and mainly you want to concentrate, well, actually you concentrate on both of them. But, you know, many times you'll catch them when they're first moving on your mover scan. If you miss them right here, then chances are, if they're good ones, they're going to be running for the day. you'll definitely catch them over here. Well, not always, but usually. And you'll catch them on your breakout scan. And basically for the first, let's say for the first 30 minutes of the market opening, you're going to try to find 1, 2, 3, 4 different good stocks that have a good potential for going up. So, like for instance, let's say that you caught this one and it was, maybe it moved a little bit faster than that, and it started moving up from 43 up to 44, 45, or you just started seeing it get some volume and start to go up. It wouldn't hurt to just throw in $500 into this stock and see what it does for the day. Now, on these stocks, maybe you can play them a little bit bigger, but on your smaller stocks, let's say your .0023, or these, you can't see it, like these type of stocks that are trading for .0016. You throw $500 into these things and you'd be surprised how they go up 100% in a day, all the time. Like, just amazing. They do it 70%, 100%, 400%. I've seen them go up 4,000%. So you can make a lot of money on those small little stocks by catching them on your scanners early. And I mean early, like even the first 5 minutes of the market being open, they start moving already. That's because like before the market came out, they came out with news. And that's what you want to do. You want to bring up a stock, see if it looks good, see if it looks like it's got some potential. It's starting to go higher. It's getting a little bit of volume, not a lot. It won't have a lot of volume at first. It'll be very low at first. You won't be able to use volume unless it's starting to get good volume. It's getting some action. That's different. But usually they'll start off real slow. But are they up? Are they up 5%, 10%, 20%, depending upon what they're like? A smaller stock like this, ETIM, that trades for .0016 or .0019, will go up a higher percentage by the time that you see it, because each tick is a high percentage already by itself. This one would be a lower percentage by the time you should have saw it. You should have saw it no more than 10%. Well, I'm kind of being too general here. I mean, it depends. If this thing was down at 40 and it went up 10%, it wouldn't be that much. It would have only been 4 pennies. So, but at 50, it would have to go up 5 pennies to go up 10%. So, you want to catch it around 10% or so. This is the earlier, the better. And one that ideally has news. Now, this one didn't have news, so it would have been, a real shot in the dark on this one. But you'd be surprised how often you'll get them if you just get them early. Just put $500 into them. If they don't go anywhere all day long, and you just sell for $500 or a short little loss, it's no big deal. If it does go down on you 10, 20%, even 30%, it won't kill you. Because you only got $500 into it, or let's just say, a small percentage of your account. So if your account was $2,000, you could do $500 4 different times in 4 different stocks. But if you just hit one out of those 4 that does go up 50%, you'll make $250, or 100% for the day, you'll make $500. And you'd be surprised how easy that is. Because, for instance, let's say that there is going to be a stock tomorrow that's going to run pretty good. Well, chances are, in the first 30 minutes, you will see that stock on one of these 2 scanners here. Chances are. And, you're not going to know which one it is, though. But you can check for news to see if it's got any news. That's a real strong indicator that it will go up for the day if it does have good news. You can check for the action. The more action, the better, probably at first. You can check the chart, the 5-day chart. What's it look like? Is this thing just getting started, or is it finishing up a 3-day run? If it's finishing up a 3-day run, don't get into it. But if it's just getting started, that's better. You'd be surprised. I mean, if you only hit 1 out of 10, you'll be doing fantastic. As long as you don't get yourself in any bad losers. And if you're getting them early, you shouldn't have any bad losers. If you're getting them early, maybe by the end of the day, you'll take a 20% loss or something, 30% loss. But just one winner that you make 100% on, which will come a lot, you'll make a bunch of money. Just 1 in 10, and you could probably pretty much hit that. well, maybe not 1 in 10. Okay, 1 in 20. You can pretty much hit that. But if you're doing 4 a day, that's 1 a week. So get 1 good one a week. And you'd be surprised how easy it is to get on a roll where you can hit like 2 or 3 in a week and double your money. So, $1,500 in a week, maybe lose, maximum 500 of that, and you're still left with $1,000. And the idea is that you buy them first thing in the morning, okay, when they're first moving, first 15 minutes, first half an hour max, and then you sell them at the end of the day, whatever they close at. Unless they close really super strong and they got some great news and the thing is just flying up and it looks like a gapper, then you can go ahead and hold it. But generally speaking, the strategy is to buy them in the morning, hold them all day long, let them do whatever they're going to do. Don't bother with the ups and the downs and the dips and the spikes. Don't even bother. Just sell it at the end of the day. For instance, if you come in at lunchtime and you see this thing is up 50%, you say, all right, 50%, ooh, that's great. I'm going to sell it right here. Well, you'd be kicking yourself at the end of the day. The thing doesn't close 400% up. And that happens all the time. All the time. Many, many, many times. That happens and will happen. Especially when you catch these things early. Like if you'd have caught this only went up 1%. Let's just say it went up 100%. You probably would have caught it when it was like about 25% because it's so small. 25-30% maybe. And so you would have made 70% on it. But you'd be surprised if this thing go up 200%, you'd make 170% on it. So you can really do good. And as your account grows, you can play them bigger and bigger. So you could go from $500 a trade to $1,000 a trade to $2,000 a trade. I mean, you get up to $2,000 a trade, you start getting a little bit of practice at this, a little bit of skill at this, to know what to look for in the morning. If you don't see it, you don't buy. If you see it, you buy. You put $2,000 per trade into this. You'd be surprised how easy it is to make, $5,000 a week just playing this one strategy for 30 minutes in the morning and 5 minutes to be at the market when the market closes. So it's really not that hard. It's more tricky than what I'm making it out to be right now. But if you practice it and get the feel for what a good one does look like, don't have to push it. But you'd be surprised how if you buy some stock, chances are it just won't do anything for the day. Like it starts to go up 10%, you buy it, it doesn't really do anything. Maybe it goes back down, and you can sell it for 10% loss. Well, a 10% loss to go for a 50, 100, 150, 400% gain is not that big of a deal. And it just works. So it's a good strategy to practice. And the magic is in these scanners, by bringing them to you early, and by you going over to Yahoo, checking the news, and by you looking at the level 2, and you seeing something funny going on. This market maker keeps popping up. It looks bullish. And there's no news. Okay, well, this thing's moving on no news. You're catching it real early. Just $500 into it. That's it. $500 into another one. $500 into another one. You see another one pop up. That one looks not bad. Okay, $500 into that one. Boom, let's go. And, leave for the day. Come back at the end of the day. And you'd be surprised what you'll come back to the end of the day at. Be like, wow, I'm 100% up. All right. $500 and sell it. Take your profit. So it's not that hard. It's not like gapping though. Gapping is more straightforward and you're just playing the hot stuff, and gapping really works good. With the other one, you're going to take more losses. It's going to be more frustrating. Stocks, you're going to go into 4 different stocks. You think they're going to do something, they don't do anything. One of them will take a bad loss and go 30% down. But when you do hit those winners, those 100%, I'm just going to close these scanners out. The market's closed and they don't know they're not looking for anything. I'll just close those. You'd be surprised how easy it is, but at the same time, it's more frustrating. It's going to take more time. You're only going to hit 1 in 20, but you'll hit them, and they're real fun to hit. When you do hit them and you can come back and you see that you're way up, it's real nice. Well, the bottom line, you should be able to make a much higher percentage than what you lose. Just play it like you do when you day trade, and cut it at the end of the day, no matter what it's at. Buy ones that haven't gone up a lot already. That way, they won't go down a lot on you. And you can be successful at that trading strategy. It works. and it works pretty darn good. Gapping works really, really good, obviously, and is easier, but when you get into it, you'd be surprised how easy that is. You might want to try it out. And I do, recommend trying it. And that's pretty much it. It's pretty simple. You just want to catch those stocks moving early, throw a little bit of money into them, hold them all day long, hoping for a nice big winner at the end of the day. You'd be surprised. It happens more often than you think. So that's it. That's the 7th video, part-time trading strategy. That's the conclusion of this video and this trading series. I really hope you enjoyed these videos. I think I've taught you a lot in these videos. I'm sure I left some stuff out, so when I find out what it is, I will do another update to these videos and include anything in there that I did leave out. But you've got a pretty good solid set of videos here to learn from, and to learn how easy it is to trade, and to learn how to trade, and the tools, and most importantly the mental aspect of trading. And I think with what I've taught you, you should be able to go out and buy yourself and make a lot of money at the market. Of course, you can always come in my room and I'll help you trade, and you'll have my experience and my skill, my knowledge there to help you. But the reality is that you can do this yourself. It's not that hard. Take a little experience, a little skill, a little practice, get the mental part of it down, and you can learn to trade and do this for a living, or do it part-time and make great money at the stock market. So I hope you enjoyed these videos. It was a pleasure to teach you how I trade the market, and to teach you more about trading the market, and hopefully to teach you to become successful trading the market. And if I record another update video for this trading series, I'll see you in that update. Otherwise, this is the conclusion of this video. I hope you enjoyed them. And if I record another one, I'll see you then. The best of success with your trading.